whatever we have to give importance, those area I will cover. And first we will start with bank finance. And before going that, I'll just share with you one thing. Actually, please don't get scared how the question paper would be, because generally you have to go prepared for that, because marine, they always ask standard questions. In fire or motor or miscellaneous or reinsurance, HR, any subject for that matter, once there might they might ask easy questions, the other year they might make it very difficult, not even able to lay our hands on that. But as far as marine is concerned, there is no much easy paper or very tough paper. It is always a standard. So we have to go with that in mind. You cannot expect easy questions, and also you need not be very scared that it must be it will be very complicated. And even in the sums, even if they are asking some sums or problems which are to be actually solved, mostly they will check our understanding only, because there is no need to by heart anything, like unlike motor, because in motor we have to see excess, we have to by heart the depreciation table and all these things, towing charges or immediate repairs, all these things we have to keep in mind. And there will be lot many classes of vehicle. For each of the things they might be having so many restrictions. All those things are not at all available here, only logical, and they will be testing our logical knowledge and logical sense only. So whenever we get a problem or a sum in the question paper, just first we have to try seeing whether it is a payable claim. Then only we have to go and start working the that is the problem. That is, we need not just take the sum into whatever is there, excess. We need not go like that, because most of the sums, as I have heard from our friends who have taken their exams, mostly it will be unpayable claim or related to logical only. So we have to first check whether it is covered, because mostly they might ask ICC-B. So we have to be very thorough on what is covered under ICC-C, B and A. If we know that thing for sure and we know the exclusions, then half the problem is solved. And also we must know what type of Incoterm the seller has used or the buyer has used. That is, in that sum, what type of Incoterm it has been mentioned. So based on that, our calculation or our liability may differ. So that also we have to keep in mind. This is the only thing which we have to have it in mind. And now we shall go into the subject. And first we shall see what is bank finance. The thing is, generally in our day-to-day life, you would have seen so many transactions or business transactions wherein there might be, say for example, we have to make the payment in advance, and then we will get the consignment later, or we will make down payment, or we will make full payment at a later date. Or sometimes these wholesalers or dealers, what they will do is they will get the whatever is the that is the things which are for their business. Say for example, Samsung dealer, what he might do is he might have all the Samsung products in his shop, but for, that doesn't mean that he has paid for all the goods he is having with him. What he will do is he will have an agreement with the Samsung manufacturer, and he will have all the Samsung products in his showroom. So whenever he is able to sell the each and every product, he will give that amount to the seller. If he is not able to sell some model due to some problem, or it is a failure model, then after few days he might also return to that. That is known as consignment purchase. But in marine, we are not bothered about all these things, because the consignor is somewhere and the consignee is somewhere. The exporter is in one country and the importer is one country, and they might not even have a face-to-face contact. They only operate through computers. So that is why generally we get into few that is maybe some technical terms like bill of exchange or LC. So bill of exchange comes under the head documentary collection. So what here is the that is how it will go is, generally the exporter along with the invoice. Generally, what the exporter will do, as soon as he has manufactured and he is getting into touch with the importer, immediately he will prepare the invoice and maybe pro forma invoice. He will send it to the importer stating that this is the thing which I am having and I wish to sell it to you in this rate. So this will be the packing rate, this will be the GST, all these things, all and also per unit rate and how much it will cost for 100 or 1000 as the case may be. He might give all the details in those in that invoice. Along with that invoice, he will raise a bill. Bill is nothing but how we generally in day-to-day life, we just go to any shop like Saravana stores or any other shop. Just when we go there, they will just first give us the bill, and with that bill we will go to the cash counter and then we will pay the amount. Then they will give the receipt. Like that, bill is nothing but it is an order or it is a notification that the buyer has to pay this much so that he can become the owner of the goods. So exporter will raise the bill, that is the bill of exchange. And then what he will do is both the exporter and importer, they cannot handle the that is the documents on their own. That is why they seek the help of their own bankers. The exporter will say, will give all these documents along with invoice, packing list, and then bill of lading, all these things. Along with all these documents, he will give his bill of exchange also to his bank. So that exporter's bank will be a remitting bank who will be collecting all the documents. And then what he will do is he will send it to the bank of the importer who will be the collecting bank. That is, he is collecting all the documents. That is why he becomes collecting bank, and he takes all the documents in his custody. And then that remitting bank, he will give instruction to the collecting bank. That is, the exporter's bank will give instruction to the importer stating that the importer will come and ask you, because without these documents he cannot just go and take delivery of the goods, because as soon as he has shipped, the exporter has shipped the goods and he has given the documents to the remitting bank. Now the importer has to collect these documents from the collecting bank, then only he can go to the port and get delivery of these goods. Without these original documents, port authorities or the carrier, he might not deliver the goods to the importer. So he needs those documents. So he will go to the collecting bank and he will ask for the document. So at that time, remitting bank would have given instructions to the collecting bank stating that you can release the documents only if the full payment has been made. So in that case, it becomes bills against collection or documents against payment. That is, documents against payment means these documents can be handed over to the importer only when the importer pays for the goods. Then it becomes documents against payment. So, but mostly what will happen is the importer, as he is a businessman, he doesn't want to put his money in advance, and then because his funds will be locked. So what he might do is he might say, okay, now I cannot pay the money. I will accept that I will pay it in 30 days time or 60 days time. In the meanwhile, I will take delivery of these goods. I will do business. So I will also get the money and it will be easy for me for my liquidation. So in that case, the remitting bank and the exporter, they may accept this, and what they will say to the collecting bank is, okay, let him give a declaration stating that you take an affidavit from him, stating that he will accept this bill and he will take the delivery of the documents so that he can take delivery of the goods also. And in his acceptance, he have to mention the date on which he will make the payment. So in that case, what he has to do is he will just give an acceptance, that is known as documents against acceptance. So one is documents against payment and another is documents against payment, against acceptance. So in both the cases, the collecting bank will be given instruction by the remitting bank and exporter. Then only this collecting bank shall act on it. And in the same way, the exporter also might find that he is also a businessman, so he would not like his funds to be locked because already he has manufactured and he has sent it. That importer is asking for 60 days time or 30 days time. So then what will happen if he is not getting his funds back? So what he will do is he will ask his banker, that is the remitting bank, he will say, okay, I need my money now itself. So it is up to you because you are a banker. So you can take the money afterwards, but you give me credit immediately based on the production documents. So this bank, what it will do is the remitting bank, it will discount the bill. That is, it will discount a percentage, maybe 5% or 10%, and it will take as its bank charges, and it will give the amount. Say, for example, the consignment shipped is for 1 crore. The exporter is asking for the remitting bank to discount. He might say, okay, 10% I will keep for my bank charges and balance 90 lakhs or something. I will give it to you now. So that 10 lakhs will be the banking charges, and it will be the commission for the remitting bank. And now the exporter has got the immediate cash. So all are happy. But in practice, it might not happen in some cases, because the importer may not pay the bill. That is, he may not honor the bill. In that case, again, the remitting bank will actually, he will not be the loser, but because the exporter, based on these documents only, he has got, so it is the responsibility of the exporter to make good the loss of the remitting bank. That is, these 90 lakhs, whatever he has paid, because he would have given so many, that is the property as this thing to the bank. So based on that, the remitting bank will collect that amount. So anyways, in case of acceptance or in case of payment, that is documentary against payment or documentary against acceptance, this exporter will have always a risk factor for his sales. Because if the importer in any situation he turns out not paying, then it will be the responsibility of the exporter to bear the loss. That is a very great thing, because they don't know each other. That is why bill of exchange generally the exporter will not like. That is why he wants to go for letter of credit. What is letter of credit? Here, because in the early instances in the bill of exchange, both the banks acted as only the intermediary, and they have not vouched for the payment of the buyer. So it is up to the buyer to pay, or it is the responsibility of the seller that he gets the payment. So there the bank acts as only the intermediary. So, but here in letter of credit, the seller would say, no, I want the bank to take charge of the finance portion. So let the bank vouch for me for that buyer, because I don't know the buyer. He might be in US or Australia. Now I am a poor seller in India. I might not know what is happening there. So what I will do is I will ask, I will ask the importer to get a letter of credit, that is a confirmation from the bank that he will pay the amount for goods, and it is between the importer and his bank, where when they are going to take, whether after 30 days or how he is going to honor that, I am not bothered. But I want a confidence from the bank of the importer that he will pay and he has to pay for me. Like that the seller will say. So in that case, the buyer, he will be the applicant of the letter of credit, and he will go to his bank, that is the importer's bank, that is the issuing bank. The applicant will go to the issuing bank and he will say, okay, I am going to have a sale contract with this seller. So you please issue a letter of credit on my behalf in his favor. So he will issue the letter of credit. That letter of credit, it will not be handed over directly to the seller. Instead, what they will do is that letter of credit will be handed over to the bank of the seller, because here seller wants his bank to vouch for it, because the seller is in maybe the buyer is in US, he is having account with some XYZ bank, he is getting an LC from that XYZ bank. Here an exporter at India, Chennai, he might not know the whereabouts of the XYZ bank. He doesn't know whether that XYZ bank can sustain, or whether it will get liquidated in few days or something like that, because we have seen so many things in the past regarding how in US insurance and banking companies, they all went into loss. So this seller, he might not know whether he can that is have confidence in that bank who has issued that letter of credit. That is why he would ask his bank to check all these whereabouts and give him advice whether I can go about it. So in this case, whichever bank is issuing that letter of credit, that is the importer's bank, it will be the issuing bank. And whichever bank that is advising the seller that it is good thing only, so you can go about doing your business based on this letter of credit, then he becomes advising bank. In some cases, what will happen is even this advising bank, he might need confirmation from a third bank. That is, mostly this advising bank acts as confirming bank, but sometimes even say for example, this our seller at Chennai, he is having his account with Canara Bank. Canara Bank also might not know whether that XYZ bank is good or not. So he might find a bank who has branches both at the export place, also import place. That is US as well as Chennai, maybe Citibank, maybe American Bank, maybe some Standard Chartered Bank, like that, some bank which is having branches at both. Generally, they prefer that, and they will go to that is the Canara Bank, that is the advising bank. It might go to that third bank and it will ask for confirmation whether you are confirming this. If you vouch for XYZ bank, we will accept this that LC. So there might be 3 banks, or most of the cases they will end up with 2 banks also. So in that case, if there is a third bank coming inside, then there will be issuing bank, advising bank, and confirming bank. Or if there is 2 banks, then the advising bank and confirming bank will be same. So this is the cycle how LC works. In the first instance, that is number 1, there will be sale contract between applicant and beneficiary. In the second part, the letter of credit application will be done by the applicant to the issuing bank, and then the issuing bank will be issuing letter of credit and it will hand over it to the advising bank. And fourth stage is advising, that is the advising bank is advising his seller, and he makes the shipment in the 5th stage. And after making the shipment, he will hand over all the documents to his own bank, that is the advising bank, that is the 6th step. And this advising bank, he will present the documents to the issuing bank stating that you will have to make the payment. And so the issuing bank will make the payment. And after that, it is between the issuing bank and the applicant to get the documents released or make the payment at a later date or immediately, whatever is that is between them. So in this case, the beneficiary becomes, the seller becomes the beneficiary, because in one of my attempts in my earlier exams, there was a question, who is the beneficiary in LC? So if that be the case, we have to say that beneficiary is the seller. So with this, we are coming to end of letter of credit. So for letter of credit, generally, like Incoterms, like we are going to see Incoterm next. So like Incoterms, letter of credit also has uniform practices, because generally these banking transactions and insurance transactions are done worldwide. So we should adhere to similar terms so that we will avoid any confusion or anomaly. So that is why ICC, International Chamber of Commerce, it used to issue rules. So it will be often modified according to the practices which are being generated day by day, because there might be so many practices coming in, new practices and new this thing, and it might also need developments. So like that, every now and then these rules are being modified. And now the latest version is how we have computer in Windows 9, Windows 8, like that we are having like that. The Uniform Customs and Practices for Documentary Credit, that is the UCPDC or UCP. Now the latest version is UCP 600. There are lot many rules in that UCP 600. In that, Article 28 deals with insurance documents. Like how in your Motor Vehicles Act, there are so many sections. It might talk about driving license. It might talk about the duties of the insured, or it might talk about the police authorities, all these things. Like that, UCP also talks about so many things about commerce and trade. And in that, Article 28 deals with insurance documents alone. And few things which are being said in Article 28 are, we all very well know that it has to be signed, that is authorized signatory to sign the insurance policy. It has to be with seal. So many number of originals, even though now the original doesn't have any sanctity, because in computer we can get n number of originals, but still because it is a practice to have that, so they are having that word original. and then coverage should start prior to shipment, and then warehouse to warehouse cover should be there. Whether 10% of invoice you should add it, or it is for 100%. All these things, Article 28 says. So that is why the seller or the buyer, whoever is there, they want to have insurance as per LC, because without that insurance as standby, the LC will not be issued. That is why they are very much worried about the LC terms. So with this, our LC comes to end, and now we are going to Incoterms. Any doubt in LC? Shall we go to next chapter, Incoterms? Is the screen getting shared? Is it moving?
Yes. Yes,
yeah.
madam.
Okay. Then I will take it that everything is clear, and we will go to the next topic, Incoterms. Incoterms, as I said, it is through online only, mostly our transactions, that is the insurance transaction as well as the trade transaction. So it is the agreement of carriage, responsibility, and insurance. Incoterms is nothing but it is an agreement between the seller and buyer regarding who will arrange for carriage, or who is responsible up to which stage, and who will take insurance. All these things will be taken care by the Incoterms. So there are actually it can be divided into, bifurcated into two. One is for these Incoterms can be used for any mode, and another one is it can be used for sea and inland waterways only. Like free alongside ship, FOB, cost and freight, and CIF can be used for sea transit only. And here all these things are, all the other things, or these can be used for any transport. For any transport means mostly these things it will be used by containerized cargo in case of sea or inland waterway. Actually, generally in Incoterms, it is being revised every 10 years. So the latest being 2020. So actually, there is no much difference between 2010 Incoterms and 2020 Incoterms. All are same. That is like previous year, previous Incoterms, 2020 Incoterms also have 11 Incoterms. So 7 for any mode of transport, and 4 for sea and inland waterways. Only thing is name has changed. That is for delivered at terminal, they have made it as DPU. We will just discuss in the later part of our session. And other things, it remains the same. So we need not worry about because there are so many already modifications done in Motor Vehicles Act. Many health policies have come, and fire policy has also changed. Now this Incoterms has also changed. Whether I have to remember the changes, don't need to worry, because there is no much change. Only thing is, only the nomenclature has changed. Even the technical aspect has not changed. And so in order to understand, or in order to have it in our mind, what we will do is we will bifurcate these terms into D, C, E, and F terms. Okay, whatever is the term starting with D, we will term it as D. Whatever is that Incoterm which is starting with F, we will have it as F, and E and C. Now we will see how it goes, how it operates, and it has also a commonality between these things. That is why, so it will be very easy for us to understand. So we will see from the angle of seller. Okay, so now we are going to see the responsibility of the seller. So in whether the risk passes from seller to buyer before the main carriage or after the main carriage, that is the crux of understanding the Incoterm. So first we will see C term. C term means here the carriage is being arranged by the seller, but the risk passes before start of the main carriage. So we all know very well that carriage means that the main carriage means either the sea transit or air transit, as the case may be, because marine also covers the incidental land, rail, or any other transit. So we are not bothered about those inland transits, but we are bothered about main carriage only as far as Incoterms, because we will understand when the responsibility gets transferred. So in C terms, it is the responsibility of the seller to arrange for the carriage. Either he will pay for the freight or he will not pay for the freight. That we are not bothered. But he arranges the carriage and risks passes before the main carriage. In CFR, the cost and freight. It means that freight has been arranged by the seller and freight has also been paid by the seller, but the risk is up to on board the ship. Okay, likewise, in CIF also, insurance and freight, that is insurance and carriage are being arranged by the seller and his risk is up to on board the ship. Even though in insurance we do cover as warehouse to warehouse cover, we have to keep it in mind that in CIF generally they used to take, the seller used to take insurance, but in that insurance also, his responsibility is up to on board the ship. Generally, why it happens like this is, as soon as he ships the consignment, what he does, we saw in our previous slides that as soon as he dispatches the goods, he will hand over the documents to the to his banker. While handing over, he will hand over the insurance documents also. And we all know that insurance document, insurance, that is marine insurance policy, is a negotiable instrument. So he will just sign on the rear side of the policy and if he will assign it to the buyer. So he is no more insured there. As soon as he assigns the policy, the buyer becomes the.
Sorry to disturb. There is a lot of disturbance, madam.
Yeah, the others who are. Hello, the others, please. Hello, friends, whoever has unmuted their mic, please mute it. Redmi 9 Power, who is using that? I think they are not hearing also, listening also. Okay. So here, the cost and sorry. So here also that insurance, even though we are giving warehouse to warehouse cover, the insurance gets, because the insurable interest gets over on board the ship because he is handing over the documents to the bank assigning. So no more he will be the insured or he will be the owner of the goods. He is handing over the ownership as well as the insurance to the buyer. So that is why in cost insurance rate also his responsibility, that is the seller's responsibility, will be up to on board the ship. Then comes carriage paid to. Carriage paid to means here also the seller, he arranges for insurance, but only difference between cost and freight and carriage paid to is here also he is paying the carriage, but his risk will come to an end as soon as he hands over to the nominated carrier. What is the difference between on board the ship and nominated carrier means? Because the carrier, he might come to the seller's place himself and he might take charge of the goods. Sometimes what will happen, it is a bulk goods or they are having a full container load. In that case, what they will do is the carrier will send the container to the seller's warehouse itself so that all the things are being packed inside the that container and then he takes charge of those goods. In that case, the nominated carrier, whoever is there, he comes to the seller's place itself and takes delivery of the goods. In that case, the seller's responsibility ceases from that point. Or sometimes the carrier may say, I cannot come to your place, you come and hand over the goods to me, like how our courier boy says. Whatever we do, what we do, whenever we want to send some valuables to any person, any friend or relative, we go to their place and we hand over to them and we tell them these are all the things which is being, because it is a fragile item, all these things we make an application and we hand over those goods to the courier wala. Like that, this seller, he might go to the nominated carrier's place and then he will hand over the goods. In that case, as soon as he hands over the goods at a specified place to the nominated carrier, from that point the seller's responsibility ceases and the buyer's responsibility begins. So the difference between the cost freight and carriage paid to is, in cost and freight, even though the carrier has taken delivery, still the seller's responsibility will be up to on board the ship. In CPT, the seller's responsibility gets over as soon as it has been handed over to the nominated carrier. In CIP, the carriage and both the insurance and carriage both are arranged by the seller and he will pay for the freight and insurance. And again, the difference between CIF and CIP is in CIF, the responsibility of the seller is up to onboard the ship. Here, as soon as the seller hands over to the nominated carrier. So in C, we have to remember that that is the seller is arranging for the carriage, but risks passes before the happening of main carriage or the start of main carriage. In D term, seller arranges main carriage, but risks passes after main carriage. That is after it reaches the destination. There might be three instances where this can happen. One is delivered, place, unloaded. This is what I told earlier. It was delivered at terminal. The technicality has not changed, only the nomenclature has changed. Actually, now it is more easy to remember and understand also because that U word has come here. That U letter, it denotes unloaded. So we need not have a doubt whether unloading is covered or not. So if it is delivered, place, unloaded, it means that up to the port of destination after unloading, the buyer's responsibility will come. Up to unloading portion, the seller's responsibility will be there. So delivered, place, unloaded means up to the port of destination, up to unloading. Till it is unloaded, it is the responsibility of the seller. And after it has unloaded, even the import formalities, all these things have to be taken care by the importer. Delivered at place means it is almost like DPU, but one thing is the unloading portion is the responsibility of the buyer. Say, for example, it is an import consignment from US to Chennai. So, delivered, place, unloaded means as soon as the goods are placed on fortress site, that up to that point, seller is responsible for DPU. But if it is DAP, then as soon as the ship reaches the Chennai port, his seller's responsibility will be over. From the unloading portion, the buyer's responsibility will start. So that is the only difference between DPU and DAP. Then again here the duty, all these import formalities will be done by the importer. Delivered duty paid means here it is the responsibility of the seller to see to it that it is delivered up to buyer's warehouse. That is what the seller will do is he will arrange for the inland transit, he will arrange for the carriage, main carriage, he will pay for it, and he will organize all those export formalities and import formalities. He will be responsible for loading and unloading, and even in that destination port, whatever inland transit is there, that is also the seller's responsibility and his duty. That is even that his duty here. This duty doesn't mean the responsibility. Here, this duty means the customs duty. So, delivered duty paid means he has to pay the customs duty and make all the formalities. And in most of the cases, he will be required to deliver it to the buyer's warehouse. In some cases, he might say, you need not come up to my place. Instead, you deliver it in some other place. Whatever is the place that is being told by the buyer, up to that point, it is the seller's responsibility. It means that like how we are ordering in Amazon, we are placing our order. It is up to Amazon to make it available to us at our house. Is that not so? That is known as delivery duty paid. So then E term is, it is an exactly opposite of delivery duty paid. Here the seller does nothing. He just manufactures, packs and keep it ready for the transit. It is the buyer's responsibility. The whole of his responsibility starts from the time he takes the goods from seller's warehouse. Even that loading portion from seller's warehouse to a truck, that is the responsibility of the buyer. So here, if someone comes to us with invoice X works, we cannot give marine insurance because that is the seller. If seller comes with X works invoice, then we need not give insurance because X works seller does not have any responsibility in transit. This responsibility gets over as soon as he packs and make it ready for transit. Even from that unloading portion, it is the responsibility of the buyer. So in that case, the buyer will be, because mostly where it will be sought is, say for example, the buyer thinks that because he has very much good link at the exporter place also, he is making so many business transactions, so he knows very well the transport. He knows very well who are all the carriers, how it has to be handled, all these import formalities. Because that seller, even um actually beyond the seller, the buyer might be having so many acquaintance in that port of destination. So what he would do is, okay, I know everyone there, yeah, so even if I go there, it will be much cheaper than giving it to the responsibility of the seller. So like that he might think. So then that becomes experts. Here the buyer is responsible for all the carriage. Then in F term, the buyer arranges for main carriage. Okay, in C and D, the seller arranges for main carriage. In F, buyer arranges for main carriage. Then up to which place the responsibility of the seller would be? In FAS, that is the free alongside ship, it would be up to the port of dispatch. That is, alongside ship means the word itself, it speaks for itself. That is, as soon as the goods are placed at the port, up to the port, it will be covered. Once it is being shifted for loading into the ship, his responsibility ceases. Free alongside ship means his responsibility will be up to alongside ship. As soon as it reaches the alongside ship, he will be free from his responsibility, and from that portion, even the loading will be done by the loading will be the responsibility of the buyer. Free carrier means as soon as he is handing over to the carrier. But only thing is, between those things and here, the buyer arranges for the main carriage. That is what we have to remember. And FOB means we know it is up to onboard the ship. So we can have it in mind with these terms. So if we know that when the buyer arranges main carriage, or up to which point the seller is responsible, then it will be easy to take care of our problems in.
Madam, C terms coming, madam.
Hello, C terms காமிக்கணுமா? I will give all these through Shantakumar. You will be getting all these slides. Okay. So no need to take that is make note or something like that. You just listen to me. I will give all these slides through Shantakumar.
Madam.
Yes.
X works. Who will arrange the carriage? You said everything will be done by the.
Everything will be the done. Yeah, that is all. Buyer responsible for all carriage. Buyer will be arranging for carriage, everything.
X works.
X works, yes.
So that comes under F terms only.
F varade. Adha F nu vechikalam, but why I am not telling it is F is it starts with E, and also the thing is full responsibility is with the buyer, no. So for your understanding, you can keep it like it is like F. It is like F. Yeah, if you want it more this thing, that is C and D. First two carriage will be arranged by the seller. Last two, E and F, carriage will be arranged by the buyer. Okay.
Ma'am, what is the difference between CFR and CIF, ma'am?
CFR and insurance will be the responsibility of. Actually, the thing is, we have to understand one thing, because all these Incoterms, they talk about carriage only. Insurance is not a must. Only in few cases, insurance is a must. Okay. So in CFR, it is the responsibility of the seller to arrange for carriage. He need not arrange for insurance. In CIF, he has to arrange for insurance also. Okay. So only in two instances, insurance is compulsory for seller. One is CIF and one is CIP. Nowhere insurance has been made compulsory in Incoterms. It is only for the safety of the buyer, or he himself, the seller himself wants to take insurance for his, or the banker, he might insist, because for issuing his LC, he might insist that he has to take insurance. But as far as Incoterms and other trade terms are concerned, only in two instances insurance is compulsory. One is CIF and another one is CIP. And also here they are not making it very compulsory that it has to be all risk or something. We are going to see all those things in types of policies also, because in CIF also, okay, in practice we are giving ICCA. Even it is enough if he takes ICCC. Okay, so that is the difference. Got it?
Hello, madam. Can you define the word carriage?
Carriage means that is a transit. That is actually if you are exporting your goods through sea, that sea carrier, that is whoever is the person who is responsible. That is, he might be the vessel owner, or he might be the freight forwarder, or he might be the cargo clearance. That is, his business is to take goods from one person and hand it over to another person. That is the responsibility of the carrier.
Whether it is also includes inland transit also?
Inland transit also, but generally, inland transit also, it will be called as carrier only. Say, for example, ABT Maruti. ABT Maruti services, what they are doing, they are taking all the packages from one person to another, because they are doing the almost like courier, because courier generally we do in small scale. If we do it in a large scale, then it becomes carriage.
Okay.
That is why even in inland transit it can be done. That is why here we saw, see, for in any mode of transport means this ex-work, free carrier, carriage paid to CIP, DAT, DAP, DDP, all these things can be used for inland transit also.
Okay.
Because any type of trade, it should be within these 11 terms only, whether it be inland or whether it is if they're sending it by rail, road, or courier, or whether they are sending it by air or sea, they have to resort to any of these 11 Incoterms. Okay.
Okay, thanks, madam.
Yeah, it will be that is it will be shown in our invoice. What which type of Incoterm they are resorting to. Okay.
Thanks, madam.
Okay. So now we have come to end of Incoterms. So
Madam,
with this, yeah, please.
What is the difference between FCA and FOB? In both cases, loading is the responsibility of buyer.
Which one? Which one? FCA.
FCA and FOB.
No. FCA loading is not his responsibility. I told you FCA means it up to handing over to carrier. You are seeing my screen.
Yes, madam.
Yeah,
yes.
Actually, free carrier means.
Sorry, I rephrase my first two ones. Free along
FAS and FCA,
and free carrier.
No.
FAS and FCA.
No. In FCA, the carrier, he need not be at the port. You have to understand what generally the carrier will do. Carrier, his responsibility is to take the goods. Is that not? So he might be in most of the cases, the charterer, that is the vessel owner, will be one person. Yeah, vessel owner will be owning the vessel. Another person, charterer, he will be chartering the vessel and he will use it for taking goods from one port to another. Okay, he will do that, because all those operational portion he will do. He will not know from whom I have to take the goods. So he will employ someone and he will act as carrier also. Okay, in that case, what the exporter, he will hand over to the carrier. That is, or either the charterer or the carrier, he is a different person. You just imagine the charterer and the carrier are same. Okay, or in our case, for example, I am telling, we have so many shipping agents. Is that not? We have so many shipping agents who take care of our export formalities, import formalities, carriage, everything. So as soon as we hand over goods to them, he might not immediately take it to port. Okay, he might be having in his warehouse, and then he might have a small inland transit to the port, and port also he might have there for 4 or 5 days till it is being loaded to the vessel. Is that not? So as soon as it is handed over to the carrier, his responsibility is over. But in FAS, even after handing over to the carrier, his responsibility continues up to the port premises. Understand?
Clear, madam. Clear. Thank you.
Okay. Then we will see how marine is different from other classes of business, because generally we think that marine is complicated, but it is not complicated. It has few specialities, or it has few terminologies might be tricky. So we will understand how marine is different from other classes of insurance, so that it will be easy to go ahead. And right from our principles of insurance, it is different from other classes. say in utmost good faith, in other classes of business, proposal form is made compulsory. But in marine, there is no need for proposal form. But does it dissolve the responsibility of utmost good faith? No. Because if you say that you have been given with proposal form, you might say that question was not given in the proposal form. That is why I have not given that answer. Had you asked that question in the proposal form, I would have given it. Like that, there might be some anomaly. But here, as there is no proposal form, the insured, he has to declare everything to the insurer, which is ought to be known and deemed to have been known. So it is the responsibility, that is the responsibility of the insured is more in marine, even though we have dissolved with the proposal form. And then regarding insurable interest, we all very well know that in fire or motor anywhere, that insurable interest should be at the time of taking policy, throughout the policy, and at the time of loss. If there is any change in insurable interest, immediately it has to be brought to the knowledge of the insurer. So he will decide whether to go both with the change, or he might not, he doesn't want to continue also, he might take that decision. That is the case for other insurances. But here, the insurable interest we will see only at the time of loss, because we already saw in CIF, seller will be taking the insurance and afterwards he will assign the policy to the buyer. Then the buyer becomes the insured. So that is why we are very much bothered at what time the loss has occurred, who is responsible at that time, whether it is during the main carriage, whether it is the CIF, whether it is before, after, unloading. All these things are very tricky. That is why we are very much interested in knowing the responsibilities of the seller and buyer time to time, so that we will know at which point the insured will get transferred, and when the insured is, that is the buyer is responsible, or when the seller has to be indemnified in case of any loss. So insurable interest at the time of loss. And also while taking policy, it is a reasonable expectation is enough. That is, he need not become the true owner. In fire and all, only if you become the owner of the house can you take the insurance. But here, I would say I am the buyer. I'd say I have placed the order with the US seller and he is manufacturing, and within 2 or 3 days he might be sending it. So this is the invoice. Based on this, you give me insurance. If I come to you, you can give marine insurance to me, because that as it is, the ownership has not come to me. It is still with the seller. He has not completed his manufacturing. He is going to complete it and pack it, and he is going to send it after 2 days only. But I am coming to you for insurance, and based on the invoice, you will give insurance in my name if I want, because the reasonable expectation of acquiring interest or ownership is enough, and the true ownership is not needed to give insurance. And regarding transfer also, there is no automatic transfer. We have seen already, it is assignment. Based on assignment only transfer of ownership will happen. That is, the seller will assign the policy and give it to the buyer. But if he is not assigning means, then it is no automatic transfer. We cannot say that the insurance goes along with the goods. So as soon as the ownership is changed and the insurance is also changed, we cannot say like that. Even in motor, you have 14 days time. Within 14 days, something happens, you will say that it is construed to be the name transfer has taken place, so you will pay for the new buyer also. But here it is not automatic. The policy has to be assigned. Then indemnity. Again, here also it is different, because it is an agreed value policy. So agreed value policy means depreciation will not be there. So we need not see what is the market value, how it is depreciation, whether we have to, because mostly it is goods will be new only. That is why we do not apply depreciation. If it is second-hand machinery, then we will put replacement clause and all, and there we might go for depreciation and all. But generally in cargo, it is an agreed, even hull, it is an agreed value policy. So there will not be depreciation. And the profit element added. How? Because whenever we say C means cost. Which cost it refers to? It refers to invoice cost. It is not production cost. Because in fire and all, if we say that it is finished goods is that is, it is burnt. If there is fire on a warehouse where there is finished good means, then we will give the amount of cost price only, cost price of those finished goods. But here we are adding profit element and we are taking care of invoice price. And to that we are adding incidental charges of 10% or 5% as the insured requires. So profit element is automatically added in marine insurance. And condition of average. Generally, we do not see the condition of average because we do not know the thing, what is the market value, and we, as it is not an agreed, as it is an agreed value policy, we do not say condition of average, but only in annual policy. Annual policy means it doesn't mean the policy which is being issued for 1 year. It refers to, annual policy refers to a separate policy which is being issued to cover inter-depot transfer. That policy is known as annual policy. Only in that condition of average is applied. And also reinstatement of sum insured, it is also applicable in two policies, that is annual policy and duty exemption policy. Because like your motor policy, n number of claims can be settled. There is no need for reinstatement. Unlike fire policy, motor also does not have reinstatement condition, because n number of partial loss and after the total loss still you will give. Like that in cargo also. Cargo mostly, if it is repairable damage, n number of repairs can be done. And at the end, if they come to, because mostly in cargo only once only we will get to have whether there is a claim or not. In hull it will have relevance. N number of partial losses you will pay, and at the end, if you say that if you see that there is a total loss, then for the total loss also you will pay. And subrogation only after payment of loss. Because in other, because I am comparing this with other policies. That is why we are saying marine is different. So that is why for everything I am taking help of other policies. So in fire and all, with the help of subrogation condition, the insurance company gets subrogated to the rights of the insured even before the payment of loss. But in marine, it comes to the insurer only after payment of loss. And there is a concept called abandonment, which will be associated with constructive total loss. That is, abandonment means in case it is a constructive total loss, that is the repair expenses exceeds, that is in case of cargo, the repair expenses exceeds the sum insured. In case of hull, the repair expenses exceed 80%. Okay. 80% of the sum insured, then it becomes constructive total loss. In motor, it is 75%. In hull, it is 80%. In that case,
Ma'am, can you tell on the cargo, ma'am?
Which one? That is 100%. It is no percentage. So the repair expenses exceeds the sum insured.
Okay, okay.
Okay. It is like your engineering policy. If the repair expense or fire policy, if the repair expense exceed the sum insured, then it is constructive total loss. There is no percentage mentioned. So we have to take it that 100%. If it equals or if it exceeds, then we will have it as constructive total loss and we will pay it. So, excuse me. And then abandonment means in case of constructive total loss, the insured abandons he tries to abandon the property to the insurer. That means that, okay, yeah, it is your responsibility. You take it, whatever you do, you want. If you want to sell, you sell, or if you want to dismantle it, you dismantle anything. I don't want to, I want to get rid of this hull or cargo, whatever is it. Okay, so that is known as abandonment. In that case, the insurer becomes owner. In subrogation, he doesn't become the owner. He is just only getting the recovery rates. In subrogation, the insurance company gets the recovery rates, but in abandonment, the insurance company becomes the owner. So that is why we do not take that ownership, because we might not know what are the liabilities attached to the ship mostly, because he might have gone through many ports before coming from US to India. He might have gone through many ports, and there may be many port dues. In Singapore, he would have that is gone there, but he has not paid the full dues over there for port charges. Or he would have bunkered there, that is, he would have filled fuel, that is bunkering. But he would not have paid the full fuel charges. He would have paid only 30%, and he would have given an affidavit saying that he will pay after 70% after reaching the destination or after earning his profit. So these are all possible, because generally ship owners, they are all the tycoons. So all these port authorities, they are very flexible towards these ship owners. So so many liabilities might have been attached. to the ship. Maybe there is a general average. So for that also he is responsible for some amount. All these liabilities also will get attached to the insurance company if he accepts the abandonment. If he, so that is why generally he doesn't want to take the abandonment. But if he is not refusing, then including liabilities and profits, everything will be at the that is the it will be the responsibility of the insurance company. Then proximate cause. Here also it is different because in other case, fire or motor, we have to prove it that it is due to because of accident my vehicle got damaged or because of flood these things are being damaged, like that we have to say what is the cause of loss. But here we do not know when it has occurred because just we are opening the package at the port of destination or at my warehouse, that is the importer's warehouse. At that point of time only we come to know that there is a damage, there is a breakage, there is leakage or something, because external packing is good. Many a times the external packing may be good, but inside there might be lot many damage. So these we will not know when it has happened, whether during loading or whether during unloading or during main carriage or during incidental carriages or during storage period, or whether it is due to the negligence of the shipper or negligence of the port authorities. We will not know anything, but we know that it is broken. It was handed over properly, but it is now broken. So then if it is reasonable, that is why surveyors also, they cannot find what is the reason unless it is a theft. Even if it is a theft, they would say it might be because these things, it would have, because we would not know where the theft has happened. So reasonably attributable to marine perils, reasonably attributable to theft pilferage, reasonably be attributable to strong winds, like that he will give his survey report. So even if it is reasonably attributable to, we will pay the claim. That is the that is accurate proving is not needed because it is not possible also in many cases. So that is how proximate cause is different from other classes of business. And in constructive total loss, already we saw when repair expense exceed the value, then it becomes constructive total loss. In hull, it is 80%, and in marine, there is no arbitration mechanism because it is an agreed value policy. When arbitration will come, the liability is admissible, but the quantum is at stake. That is being challenged by the insured or the insurer. Then there will be concept of arbitration. But here, as it is an agreed value, there is no concept, that is quantum based problem will not be there. That is why there is no arbitration mechanism also. And law, insurance, marine insurance follows English law. Follows English law. It is only branch of insurance that has a specific law to govern. That is, even in motor, we have a law, that is Motor Vehicles Act. But in Motor Vehicles Act, they talk about many things. They talk about driving license, they talk about hit and run, they talk about helmet, they talk about Good Samaritan, they talk about the central government's responsibility, they talk about the court's responsibility, police responsibility, all these things. But here, marine insurance speaks about only marine insurance. There only one section deals with motor insurance. Here, the whole of Act deals with marine insurance. But still, even though there is a separate branch of insurance that has a specific, that is the marine is the only branch of insurance that has a specific law to govern. But this here, the law is very flexible. It is not stringent because what law says is whatever is there, something stated otherwise that in the policy, then the whatever has been told in policy, that will only prevail. That is, unless otherwise stated on the face of the policy. So what he says is, okay, I am saying this, but if there is otherwise which is being said in the policy, then only that will prevail. So every time it takes a thing. So then held covered. This is also a different concept in insurance parlance, because held covered means in other insurances, we have to follow very crucially here. In other insurances also, if there is any change in voyage or change in interest or change in anything, location, the insured has to bring to the knowledge of the insurer, but the insurer might have accept or might not have accept, or he might even charge additional premium. But in all these cases, the change that is the effect of change will be effective only from the date it has been brought to the notice of the insurance company. Is that not? When even the banker, he has given the change of location means, then only from the date when the intimation has been given to the insurance company, we will give effect to those changes. But here, in marine insurance, when it comes to the knowledge of the insurance company, it is held covered from the time of alteration. That is the back coverage also. That is the retrospective coverage also we are given. That is known as held covered. That is change of voyage, change of destination. Definitely it has to be brought to the knowledge of the insurance company. It is not, it doesn't say that change of voyage, it will be held covered, you need not tell me. Not like that. Change of voyage or change of destination, it has to be brought to the knowledge of the insurance company. But only thing is, it will be held covered from the retrospective date of change of voyage or destination. You need not worry, because I am giving already the change has taken place, because I don't know. I am a poor cargo owner. I do not know what the ship owner does or what the carrier does. I have just handed over to the cargo to the carrier. It is up to the carrier to whether because of some climatic conditions, or because of some threat of piracy, or because of because of corona, seaport, they are not allowing us to go through that, because if it is India, from India some vessel comes, they are not allowing us inside that, so I have to take a different route. So these are all known as change of voyage. That is not in the control of the cargo owner. But once it comes to the knowledge of the cargo owner, he has to immediately inform the insurance company. In that case, we are giving cover, continuous cover. That is the change of voice that has taken place already. That is also being covered. If something happens, backdate, retrospective effect coverage is also given. That is known as held covered. Unintentional failure to report shipments or breach of warranty in hull. There might be so many warranties as to cargo is to be stored like that, stowage should be done like that, trade should be done like that, in this locality only your hull can go. All these things, there might be breach of many territorial limits. All these things, if it is brought to the knowledge of the insurance company will decide to accept. In that case, it will be held covered from the date of change. And even classification. So what may happen is the vessel may be at mid-sea. At that time, the classification has changed or classification has expired. Generally, classification will be done by inspection of the flag state has to do that. That is where it has taken the registration certificate, the vessel, they will do it. But they will have engineers all over. So what they have to do is the vessel has to inform its flag state. That is the manufacturing country, that is where it was manufactured, and they will organize for inspection of this vehicle in the nearest port. So till it reaches the nearest port and get itself classed again, there will not be classification for that vessel. So it doesn't mean that without classification the insurance will not be there, so my insurance will cease mid-sea. It is not that. It will be held covered till it reaches the next port. So these are all the special things which are for marine insurance. And return of premium. There is a concept called return of, it is nothing but refund of premium. Mostly all things are same. Yeah. Only thing is we will use a different terminology, that is all. So return of premium. Return of premium means it might happen in two situations. One is, yeah, now this word is very it has become very famous because of this corona lockdown, layup, because we used to give layup returns for our motor vehicles. If they come with certificate from RTO, we give layup returns. Like that here also, for layup period, we are returning the, because for hull they are paying lakhs and crores of rupees. So for the period for which the vehicle, that is the vessel, is laid up, they don't want to lose the premium. That is why for the layup period, they will ask for the return in premium, and we will also do that. But it will be done only at the end of the period, because unless there is a loss, we will not pay. That is, if there is a loss under the policy, we will not return the premium for layup. So we will wait till the expiry of the policy, then only we will pay for layup. Okay, but in motor we will not repay. It is only extension of policy period. Okay, or adjustment of premium at the for the next renewal premium. But here we will return the premium. In layup, in marine we will return the premium. And termination of insurance. So we should know the difference between cancellation of insurance and termination of insurance. So each and every word has a unique understanding. That is, we have that meaning. Cancellation means the insured doesn't want insurance, he cancels, or insurance company doesn't want to continue, so he cancels. So it is at the option of the insured or the insurer. That is known as cancellation. But termination means because of some happening, insurance comes to an end. Like cancellation is like VRS, going on VRS. I don't want to continue in service, so I take VRS. That is cancellation of insurance. But termination is due to some disciplinary proceedings or something like that, his services are terminated. Okay, so that is the difference between cancellation and termination. But here in termination, we are returning the premium also. Okay, if there is any change of vessel, if there is any change of classification society or change of ownership. Okay, in case of change of ownership, it has to be brought to the notice of the insurance company. Then they might continue, or else we will return the premium. So now it is 11:15. Okay, we will see coverages also. After that, I will give 10 minutes break. Okay, so coverage. So after this, any doubt?
What is the minimum, madam? What is the minimum period for layup?
There is no such, madam. Here we do not have, like how we have 2 consecutive months in motor and all. We don't have minimum layup period and all.
Okay, thank you, madam.
Ma'am, during layup period, at the end of the policy, we are returning the entire premium.
No, we will not return the entire premium. There are many things, but those things are not generally clearly laid up, and we need not bother about all those things.
Okay.
For that laid up period, proportionately, we will return the premium. It is not that the entire premium will be refunded or something like that. How much to be retained? All these things are silent. So it is up to the insurance companies. So we need not worry about all these things.
Ma'am, good morning.
Yeah.
Ma'am, while studying marine insurance, always one confusion is there. Like as you were saying, who arranges carriage and who arranges insurance, na?
Yeah.
How much ever you learn, na, madam, when the question comes, you always have, I don't know. It always, irritates me also that question. Can you just take 2 minutes to explain, madam, so that we can put it in the mind?
No,
Some easy
actually,
technique.
no. Actually, that is why we have to understand the Incoterms. That is why we saw who has to arrange the policy. Now, who has to arrange the carriage? That we saw from that F terms, E terms, C term. I think that is clear from that portion. Is that not? Who has to arrange the in the previous slides? I showed you F term, E term, C term, and D term. Is that not? Hello, you saw those things? Hello. Arranging, actually arranging insurance, because arranging carriage, you can just see those slides and you will get to an understanding, because the arranging of carriage, wherever is there, that is the letter starts with C. Then the carriage has to be arranged by the seller.
Okay.
Okay. And wherever is the word D, there also the carriage is being arranged by the seller. And E and F, the carriage is arranged by the buyer. Okay. So that we have to be very clear. As far as insurance is concerned, only in 2 occasions insurance is being compulsory. It's being made compulsory. One is for CIF and another one is CIP.
Okay, ma'am.
Okay, so other than that, insurance is not. But what questions they might ask, it is an FOB. So I have few problems which I have. Now what we will do is, at the end, I have few problems. I have given hypothetical situations to make it understand. So what I thought is, after taking care of this duration clause, coverages and everything, if we see those problems, I think people will be in a position to solve that. Okay, because I have given few hypothetical situations where in case if it is FOB, who is responsible? In case of, because mostly they will try to confuse us. Because if it is FOB, that is the seller responsibility is up to on board the ship. If there is, what they will say is it is FOB term, but it is a sinking of ship. What is the claim payable to the seller? They might ask. If that be the case, FOB means the seller's responsibility is on board the ship. So, in case of sinking of ship means ship has already, that is the main carriage has already started. Then it is the responsibility of the buyer. So, no claim is payable for the seller. It is only, that is, we have to understand the concept and we have to think on those things. So, we should not hurry on that. You just, if they say FOB, you just first you think whose responsibility up to which point. So that is why we will not waver from here to that. You just remember only the seller's responsibility, other the buyer's responsibility. FOB means free on board, that is up to on board the ship, seller's responsibility. FAS means free alongside ship, that is the seller's responsibility is alongside ship. Okay, that is carriage paid to means it is up to he has given. So you don't bother about buyer at all. You are seeing only from the angle of seller. So you have it in mind. FOB, okay, up to which point seller is responsible on board the ship. CIF, up to which point the seller is responsible on board the ship. FAS, up to which point seller is responsible alongside ship. Or the FCA, okay, it is carrier. As soon as he hands over to the goods to the carrier, his responsibility is over. Okay, like that. So say for example, there is a question. It is an FCA type of Incoterm. Okay, it is an FCA type of Incoterm. That is a type of trade. Now here the seller has handed over to they will say, okay, ABT Maruti, he has taken, he has been arranged for the transit of goods from Chennai to Mumbai. So on the way from Chennai to Mumbai, they are taking it by truck. So on the way, the truck was overturned and the entire goods damaged. Like that, there is one problem in your exam. Okay, it is FCA means, then what is the claim payable to the seller? They might ask like that, because when I wrote 2 to 3, there was a question like this. So we have to say that in FCA, seller's responsibility is over as soon as he hands over the goods to the carrier. Now it is in the mid of the transit only that truck has overturned. Then that means that it is not the responsibility of the seller. So you just have 2 things in your mind. What is the sale? 3 things actually you will have to see, sir. In any sum, you will have to see 3 things. One is Incoterm. Okay, so you will know who is responsibility up to which point. Then you will see which type of insurance policy has been given, whether B, C or A. Okay, then you will know which is excluded, which is not. Mostly they will try to confuse us with ICC B only and with that loading and unloading portion, because we will be very much confused about the total loss of packet and all. So that we have to be very clear whether they have mentioned C or B or A. And third thing, we have to be very careful whether the question is asking how much is being paid to seller or how much is being payable to buyer. Maybe that claim is a payable claim. It is due to insured peril. But if it says that how much is payable to the seller, here in our example, the overturning is a payable loss, but the overturning has occurred after that is the vehicle has left the Chennai place. Okay, his warehouse, that is the seller's warehouse or the carrier's warehouse, whatever may be the case. After it has left, maybe near Vijayawada or something, it has overturned. So nowhere the seller is responsible in that case if it is FCA. Is that not? So we have to have 3 things in our mind. Yeah, okay. Please.
Ma'am, sorry to interrupt. Whatever is in the policy, whatever is payable under the policy will be based on the Incoterms.
கண்டிப்பா Incotermsல என்ன சொல்லிருக்கோம் அதுதான் நம்ம பே பண்ண போறோம். ஓகேவா? அதுல எந்த இதுவும் இல்ல. ஆனால் நம்ம சம்முல வந்து அந்த Incoterm வெச்சும் அந்த நம்மளுக்கு அந்த ஐசிசி பிஆ சிஆங்கிறத வச்சும் நம்மள குழப்புவோம்.
சரிம்மா சரி.
அவன் இன்கோடம் வந்து எஃப்ஓபின்னு சொல்லிட்டு அங்க வந்து சிங்கிங் ஆஃப் வெசல்னு சொல்றோம்னு வச்சுக்கோங்களேன். தென் கண்ணு மூடிட்டு நம்ம வந்து there is no claim அப்படின்னு சொல்லணும் செல்லருக்கு. இது எஃப்ஓபி டேர்ம் பட் the policy has been taken by the buyer அப்படின்னு சொல்றோம்னு வச்சுக்கோங்களேன்.
payable to the buyer.
Payable to the buyer. ஓகேவா? எஃப்ஓபி டேர்ம் policy has been taken by the buyer. பட் அந்த லாஸ் வந்து போர்ட் ஆஃப் டிஸ்பேட்ச்ல வந்து செல்லரோட வேர் ஹவுஸ்ல இருந்து போர்ட்டுக்கு வர வழியில there was an overturning அப்படின்னு சொன்னாங்க. என்னன்னா
to the seller.
No, it is port of dispatch. I am not talking about port of destination. Port of dispatch la it is an FOB term means the buyer's responsibility from FOB la irundhu dana varum, because up to FOB it is the seller's responsibility.
Seller.
So anga port of dispatch ku அவன் அந்த செல்லரோட வேர் ஹவுஸ்ல இருந்து போர்ட் ஆஃப் டிஸ்பேட்சுக்கு வர வழியில ஒரு இன்லண்ட் டிரான்சிட் கிளைம் ஆயிடுச்சு, ட்ரக் வந்து ஓவர்டர்ன் ஆயிடுச்சு அப்படின்னா then it is the responsibility of the seller. நம்ம FOB termsல பையருக்கு இன்சூரன்ஸ் கொடுத்திருந்தோம் அப்படின்னா buyer is not at all at loss, so he need not be paid, so there is no
claim
liability under the insurance policy. ஓகேவா? சோ அந்த மாதிரி தான் நம்மள அவங்க வந்து கன்ஃபியூஸ் பண்ணுவாங்க. சோ கொஞ்சம் நிதானமா நம்ம क्वेश्चन படிச்சிட்டோம் அப்படினா it will be.
நீங்க சொன்ன இந்த மூணு பாயிண்ட்ஸ் incoterms, what policy is given on what terms and how much to be paid and to whom how much to be paid.
ஆமா, and how much to be paid வந்து should come in the fourth place only.
Fourth place. Okay.
Okay, because only first incoterm, அப்புறமா type of policy, அப்புறமா who to whom it is payable. இது மூணு பார்த்ததுக்கு அப்புறமா இது மூணுத்துக்கு ஓகே ஓகே டிக் அடிச்சதுக்கு அப்புறம் தான் you should go for computation of problem.
Thank you so much.
Go for computation at all. உட்கார்ந்து நம்ம ஃபுல்லா சம்ம உட்கார்ந்து போட்டுட்டு இருப்போம், அது நாட் பேபிள் கிளைம் அந்த வேஸ்ட், நம்மளோட டைம் எனர்ஜி எல்லாமே வேஸ்ட்.
Excellent madam, thank you. Excellent.
Okay, thank you. So then coverage, and we have actually I have given a few hypothetical problems also which might help our understanding. We will see at the end. Okay, so now coverage vandu we all know, because I am not going in deep because we all know these things, these are all basic only, but wherever it needs elaborate understanding, there alone I will just explain. Okay, ICCC there are three types of clauses. One is ICC A, B and C. Air for air there are only one type of there is only one type of policy, it is an all risk. So there are no three types and all. Okay, it was a question when I wrote 1 to 2, how many types of air clauses are there? It was one, it is one. Okay, and then rail or road, now it is only two. Earlier it used to be three. From 2010 clauses it has been, and also we have to understand that this air covers only export and import, that is overseas air alone is covered. But here in ITC A and B, inland air, that is, say for example, if I am sending my goods by air to Mumbai, that inland air, it will be covered under inland transit only. Earlier it used to be covered in air clauses, but from 2010 onwards it is being covered in rail or road policy only, rail or road or inland air. Then what are the perils covered under ICCC? It is maritime perils and accidental. We all know fire, explosion, sinking or capsizing, overturning. Here we have to be very because generally whenever we say fire, immediately it comes to our mind next to lightning, because of our very friendly fire policy. Because in fire we have read as fire lightning, then only explosion comes in fire. So but we have to be careful here. Here explosion, not lightning, because lightning is an act of God and it will be covered under ICC B only. So fire, explosion, sinking or capsizing, overturning of vehicle means it is the whatever land carriage, maybe it is a rail or road, incidental land carriage, that is also covered. That is why overturning has is forming part of this ICCC. And then collision other than water, they maybe it has collided with an iceberg like Titanic, or it has collided with the hull equipment, or it has collided with the dock, or it has collided with even animals, some whales, big animals, then also all these collisions are covered. Other than water, all collisions are covered. So discharge at port of distress, that is, in case of any problem we are discharging the cargo there, it doesn't mean that our liability is absolved there, even while at the port of distress, if some fire happens, some explosion happens, still we are going to cover that. Even while discharging, something happens, that is also covered. Then general average, but that loading and not unloading not covered. Only after discharge at port of distress only it is covered. Okay. Then general average and jettison. General average, that is for the common peril, that is a common adventure is in danger. Then to make good that loss, we are contributing for the sacrifice whatever has been made. So that might take three types. One is sacrifice, one is contribution, and another one is expenditure. Sacrifice is the loss of goods which have been directly affected because of the general average. That is known as sacrifice. And the other interests are contributing to that, then that is known as general average contribution. And there might not be any loss or damage to the goods, but only few expenditure are being incurred by the carrier. Those expenditure he might apportion between the interest, then that becomes general average expenditure. Okay. Here there is a slight thing, interesting thing, which is the condition of average is applied for general average contribution and expenditure, and there is no condition of average for general average sacrifice. If your sum insured is not enough, then there will not be any condition of average only for here. That is the sum insured, even beyond sum insured, all these things we are talking no. So for general average sacrifice, we will not see that condition of average. Then general average and salvage charges and both to blame collision. What is both to blame collision is? We will see salvage charges and general average, no, salvage charges and other things in the later slides. Both to blame collision means two vessels collide against each other. Maybe the cause of collision, it is to be blamed on one ship. Say, for example, there is a ship A and ship B. Ship A and B collided, but this collision has happened because of the negligence of A. So because of negligence of A, this A is responsible for the loss or damage that has occurred to the B, and also the cargo that is being carried by the B. So this is known as collision liability, which we are going to see in our hull policy. So in that we are responsible, that is the insurance company is responsible for only 3/4 of the liability of the vessel A, and balance 1/4 he will go and get it from P&I club. So this is hull portion. Why we are mentioning that collision in our cargo policy? Why? Because with that is why the contract of carriage, that is we are entering into contract of carriage with shipper. So he is issuing that bill of lading. Is that not? With in that bill of lading, there with that bill of lading, he is making the cargo owners responsible, like general average. If there is any collision liability of the vessel owner, the cargo owner should also take part in that liability for his interest. So there is a concept in bill of lading. That is why then in that case, the cargo owner, if the vessel A collides with vessel B and the vessel A is held responsible for the loss or damage to vessel B, then this A, what he will do is he will not take his the full to his share. He will also get it from the cargo whichever he is transiting. So all the interest will be bifurcated with that liability. So that liability will be taken care by both to blame collision clause. So there was a question when I was writing by 1 to 2. There was a question, both to blame collision clause takes into effect with which document? That is somewhere like that. There was some question. That is the contract of carriage. The question, the options were bill of lading, invoice, and then the LC or some other thing. Okay, none of the above. So the answer should be bill of lading. That is bill of lading only talks about the liability of the vessel owner, which is being bifurcated and which is being shared by the cargo owners also. So it is making responsible the cargo owner also for this collision liability. That is why this both to blame collision clause is being included in ICC-C. ICC-B means apart from accidental, AOG perils are also covered, like washing overboard, all these things, we all know that. Here, only thing is it needs very much our concentration is total loss of any package while loading or unloading. Maybe our cargo is for 1,000 package. In those 1,000 package, 100 package has fallen into the sea, then it means that total loss of 100 package, then we will pay. But in that 100 package, it is only torn and only few kgs from that bag has fallen into the sea, and the balance we could rescue it, then it is not total loss, it is partial loss. So what we should do? We should put that also inside the sea. So total loss of package while loading or unloading is only covered under ICC-B, and partial loss of package, it is not partial loss of sum insured, it is partial loss of one package. Okay, then during loading, because they might ask questions like this only to confuse us. So we have to be very careful. In ICC-B, total loss of package. Then, sling loss. Partial loss of package, that is known as sling loss. Malicious damage. Okay, these are all the things which are covered under all risk, and these things can be add-on for ICC-B. Maybe in our practical life, ICC-B with add-on has no sanctity, because even A we are giving it in a much lesser thing. But theory purpose, we must know that only if they are given add-on, these covers will be covered under ICC-B, or else these are not covered. They might say it is an ICC-B with malicious damage cover. They might say ICC-B with piracy cover, like that they might give as questions. So we have to carry carefully all those things. And we have to know the exclusions. That is whatever willful misconduct, these and all we know. And insufficient packing, if it is outsourced, then it is covered. If it is not outsourced and the packing is done by the insured himself, then it is an exclusion. If it is because of that fault, then that becomes exclusion. If it is outsourced and that has resulted in loss or damage, then in that case we can pay the claim. And nature of cargo, it is in whatever ordinary in nature we will not pay. Only extraordinary losses we will pay. Then war, nuclear strike and delay. War and allied perils and strike, it can be added as add-on cover. And there was one question in SRCC. Terrorism is covered under which clause of marine policy? ICCA, war, SRCC, or separate policy has to be taken, like that. 4 options were given. So terrorism forms part of SRCC clause, strikes clause. Okay. So in fire and all, terrorism is a separate add-on, but here it comes with strikes. And also another difference between fire and fire motor or something like that and our marine policy is civil commotion. In other policies, civil commotion comes along with war and allied perils. Here it is strike, riot and civil commotion. Civil commotion comes with strikes. So that difference also we should understand. Then ICC Air, it is all risk. And inland transit, it is now withdrawn. C is withdrawn. Now B is for fire, lightning and accidents. So that accident has to occur for the vehicle. Because of that, our cargo should get damaged. That is the crux here. Because see, the accident means collision, overturning, derailment. What does it mean? Collision means this vehicle, it has to collide. That is, the carrying vehicle should meet with an accident. Because of that, cargo is damaged. Then only ICC, inland transit B will cover. If you say that there is no accident to the vehicle and only the cargo has damaged because of accident, then ITC-B will not cover. We have to keep it in mind. There should be accident to the vehicle. There should be collision to the vehicle. There should be overturning of vehicle. There should be derailment of rail. Then there should be breakage of bridge. Then only any loss or damage due to all these things to our cargo is covered. Just the mere accidental damage to the cargo alone is not covered. Okay, so there should be some accident to the vehicle. So what we have to do is, in case any accidental damage in inland transit B, we have to seek the accidental report of that vehicle also. Maybe it might be even third party claim also. I mean, it is a third party policy also. We are not bothered about that. But we will ask for that is what is the proof of accident. We will ask for that. Either it should have overturned, or because of collision some glasses have broken, or some evidence of accident to the vehicle should be there. Then only we will pay in inland transit clause. Then inland transit clause A covers all risk. Then courier and registered.
One doubt.
Yeah.
How is that possible without having accident to the vehicle? How is that possible to get damage to the cargo?
Why actually there might be so many cases. No, the package we receive in good condition. After opening only, we come to know that there is a damaged portion inside. Many a times we are having conditions like that. No, after reaching
that is okay. My question is how there is a chance of accident and without the vehicle is damaged.
Without the vehicle damaged, sometimes it might happen. Say for example, the vehicle is going in a big speed. That cargo alone, it jumps and falls down. There is no damage to the vehicle.
Ceramic jugs and tools claims regularly come in our registry.
Sir, I am not getting. Hello?
In ceramic industry, jugs and jewels claim.
Jerks and jolts, jerks and jolts. Because many a times these mosaics and all, we will find that there might be so many damages. We will get to know only after it reaches the destination. But here there is another example I can tell. Like our sir is asking some other example when it can happen. Our cargo, if actually there are so many packages, like how it is washing overboard. Some of the cargo they are kept in the truck. It is not properly tied. Maybe few packets they fall down. Okay, there is no accident to the vehicle, but the package has fallen down. In that case, it is accident to the packet, but not accident to the vehicle.
Whether it is covered in A,
B, it is not covered in B, it is covered in A. Because in A, there is no exclusion. Nah. Actually, what? That is what. Because. So, tell me.
That is in ITC, in a practice, 99% policies we are selling ITC A only.
That is what, practice we are giving only A. So, we are not bothered about all this. Only for examination.
Okay, madam. Thank you.
Yeah, okay. So we have to keep it in mind. There should be accident to the vehicle, then only that cargo damage is covered. In all this, actually, whatever we will get a doubt whether it is covered in all risk or not. For that, what you have to understand is whether it is sea or inland transit or air. First, you see whatever is that covered in other policies, that is C, B, all these things. ICCC, you just go through. ICCB, you go through. Then exclusions. Okay, if all these, if the peril, whichever is being stated, it is not forming part of C, it is not forming part of B, it is not forming part of exclusion, then it is covered under all risk. In inland transit, see whether it is covered under B. It is whether it forms part of exclusion. If it is not in exclusion, all the things. So as we saw, 3 or 4 packages, it is actually it is thrown out due to the speed of the vehicle. It is not an exclusion, so it is an all risk. So we can cover. We cannot say that negligence, all these things, in order to avoid the claim, we cannot say just like that because it is an all risk cover. Okay. Courier and registered post, it has 2 forms. It has nothing to do. You can very well study on your own. So before going into type of losses means expenses also I will explain. We will have 5 minutes break. So now it is 11:40, 11:45. Please assemble here. I will just have something hot and come. Yes, any doubts?
Yeah, ma'am. In ITC-B now new addition is domestic carrier. Domestic
air carrier. Yeah.
Air carrier and courier is there. Okay.
Yeah, courier was already there. That domestic air carrier is now added. Yeah.
Any specific points to be noted in that, ma'am? Because after fire, lightning, and accident, you said collision, overturning, derailment, and breakage of bridges. So anything,
here also
anything
collision of air carrier, like that you have it.
okay.
Other than fire and lightning, collision of air carrier should be there. Overturning of air carrier should be there. Derailment will not come here. Breakage
Fire
of bridge
light.
will not come here. That is, there should be some accident to aircraft, and because of that accident, our cargo should have been damaged. Then our ITCB will cover.
Fine, ma'am. Fine, ma'am. That's it. Thank
Okay.
you.
Just in 5 minutes.
Madam, AOG periods வந்து only all rest தானா madam?
இல்ல சார், B ல வரும். இங்க பாருங்க. அதனால தான் நான் இன்லைன் ICB ல போடும்போது உங்களுக்கு அது புரியணும்ங்கறதுனால தான் அங்க ஏஓஜின்னு போட்டிருக்கேன். இப்ப தெரியுதா ஸ்கிரீன் தெரியுதா?
ரைட் ரைட்.
ICC
C ல தான் கிடையாது.
வந்து ஆக்சிடென்ட், ஆமா, C ல வந்து only accidental and maritime perils மட்டும் தான்.
ஓகே ஓகே ஓகே.
B ல தான் அந்த earthquake, volcanic eruption, lightning, washing overboard entry of C ல நம்ம flood மாதிரி வெச்சுக்கோங்களேன். அதனால தான் சும்மா peril மாதிரின்னு சொல்றேன் நான். ஓகேவா? earthquake, volcanic eruption, lightning, இந்த washing overboard entry of C ல B ல உண்டு. ஓகேவா?
ITC ல
இன்லைன் டிரான்சிட்ல வந்து கிடையாது சார். ஒன்லி ஃபயர் அண்ட் லைட்னிங் மட்டும் தான் உண்டு. மீதி எல்லாம் வந்து இதுல தான் ஏஓஜி வந்து ஏல தான் உண்டு. ஆமா.
ஓகே ஓகே.
Friends, let's break now. Madam needs a little rest. Continue. Okay, madam. Okay.
Yeah, okay. So we have seen types of policies, types of losses. Excuse me. Now it is types of losses. Yeah, we all know it is partial, average, and total loss. We are not going to talk about that. It is about particular average and general average, because we might get confusion in that. So particular average is nothing but partial loss of one particular interest. General average is the whole adventure is at loss, and that loss is being bifurcated to or transferred to other interest, then it becomes general average. Particular average refers to accidental only. Here it is always voluntary and deliberate. And we will see the other expenses which are all recoverable, because many a times we might get confusion as to the expenses payable.
Explain that first one.
Particular. The difference is, say sir, actually there are few cargos in a ship. Cargo A, cargo B, cargo C. Okay. So if that cargo A has 100 packets, cargo B has 100 packets, and cargo C has 100 packets. Okay, say for example, in that cargo A is from that 100 packets, only 50 packets are damaged due to fire, then it becomes particular average. Okay, that is partial loss of one particular interest, means that interest is A. Okay, that is one particular person's cargo. In that only partial loss has happened, then that becomes partial loss of one particular interest. In our case, it is cargo owner A. His total cargo is 100 packets. In that 50 packets are damaged, then it becomes partial loss of one particular interest. If the total 100 packets are lost, then it becomes total loss of one particular interest. Okay. But in this case, instead of fire, this 50 packets were jettisoned to lighten the ship. Okay, so in order that there is some hole in the ship and water is gushing inside, so I have to make the ship lighter. Before reaching my next port, my ship might drown. So in order to keep the stability of the ship, I am lightening by the ship. Okay. So in order to, because if my weight gets over and over, or it is getting appreciated, then my ship might sink. That is why ship is being, that is the water is coming inside. No, for that equivalent cargo is being thrown out. Okay. So in that event, this 100 packets of cargo owner is thrown on the sea, or 50 packets of cargo A is thrown onto the sea. then that becomes, because that is for the safety of the whole adventure, because in order to safeguard the transit, that throwing of 50 packets has taken place. So that loss will be shared by all the interest. Okay, that loss will be shared by, not, that is, it will not be borne by A alone. Instead, it will be shared by vessel owner, it will be shared by cargo B, it will be shared by cargo C, cargo D, like that. So then it becomes general average. Okay, whether it is total loss or partial loss of particular interest, whether it is 50 packets or 100 packets in our case, but it is whole of adventure, it is partial only, but it is being distributed among all interests. That is known as general average. Got it?
Okay. That is like my cargo is there in the ship and it is getting damaged by some other reason, means that is my own loss. General average is ship is going to
to safeguard the other interest also. Yes, to safeguard the other interest also, this cargo is being damaged voluntarily, that is deliberately it is being damaged. It is not accidental damage. I am deliberately making that loss, okay, in order to safeguard the ship, then that becomes general average.
And that is the same as jettisoning also, no?
Yeah, jettison. Actually, only difference between jettisoning and general average. Jettison is also from a part of general average. Okay, that is, jettisoning is throwing out of the cargo, and that will be taken care by the marine insurer. General average is it will be apportioned among others. In jettison, apportioning might not happen. That is why jettison forms part of general average. It becomes, jettisoning is throwing out into the ship. If it is being apportioned by all others, then it becomes general average.
Okay. And general average will have other expenses also in addition to jettison, right?
Yeah. In addition to jettison, they might incur few expenditure also, because that there might not be any. That is, jettison has taken place, and then they are reaching the intermediate port. So in order to enter that port, they may have to give some port charges. And then in order to repair the vessel, all these cargo have to be unloaded and they have to be kept safe in some warehouse. And again, it has to be loaded onto the ship. Okay. So for all these things, they might incur many expenditure. So these expenditure will all come under the head general average.
Okay.
Yeah.
So jettisoned cargo cannot be apportioned by general average, is it?
No. When actually jettison means it is throwing off cargo. Jettison forms part of general average. Actually, there is no need for a separate term for jettison. Okay, it forms part of general average, but generally jettison வந்து நம்ம அந்த marine terminology ல அவங்க யூஸ் பண்ணினதுனால first they have put jettison, then later period they have included general average, but they have not deleted that word jettison. That's all.
So every cargo jettison comes under general average, isn't it?
Yes. 99% it will come under general average. Unless sometimes இந்த common interest இல்லாம வெறும்னா கூட தூக்கி போடலாம், எதுக்குன்னு தெரியாது. Okay. அந்த மாதிரி ஏதாவது இருந்தது அப்படின்னா, then that will not be forming part of our insurance parlance. Okay. Only when it is made for the interest of the common interest, we will take to that.
Ma'am, one small doubt.
Yeah.
Ma'am, we are talking about general average jettisoning. Jettisoning throwing overboard of for saving the marine adventure. Okay.
ஆமா. Yes.
Doubt என்னன்னா, இப்போ ABC, B ஓட 10 பாக்கெட், C ஓட 10 பாக்கெட் போட்டாச்சு. A ஓட 10 பாக்கெட் போடும்போது அதுல 5 பாக்கெட் ஆல்ரெடி டேமேஜ்டா இருக்கு due to some other reason. How will you
then that will be that on the 5 packets, if say for example A is having 5 packets, that 5 packet, if it is insurable loss, it will come under particular average. If it is uninsurable loss, it will not be covered.
Okay.
But practically we might not know that. Okay, these are all hypothetical, because அவன் உள்ள போடும்போது whether it was in damaged condition or it was a sound cargo one, we may not know. We assume that they have thrown the sound cargo into the but unless the shipper, he knows that this is a damaged cargo அப்படின்னு சொல்லிட்டு அவன் சொல்லவா போறான், already damaged தானே, எனக்கு எப்படி இருந்தாலும் வெயிட் கம்மியாச்சுன்னா போறோம் அப்படின்னு அவன் டேமேஜ் குட்ஸ் கூட வெளியில போட்டுருவான்.
Okay. So the jettisoning is coming under B.
There is a specific mention that damaged goods வந்து already it was in damaged condition or already இது வருது, அதை தான் நாங்க jettison பண்ணோம்னு, if they could establish that the insurance company could establish that the jettisoned cargo was already damaged with this thing, we cannot absolve ourselves of liability, which is very, very remote practically. Because you will
Okay,
அவன் எதை jettison பண்ணான்னு தெரியாது.
madam,
Yeah.
this jettisoning, act of jettisoning is covered only under B, is it?
Only under
B.
இல்லையே எல்லாத்துலயும்
எல்லாத்துலயுமே
சீலியே
jettison.
உண்டு, சீலியே உண்டு. Even சீல உண்டு, சீலியே jettison and general average is உண்டு.
Okay.
Why this is called a particular average, madam?
So it means that in B also covered, in A also covered. If something is covered in C, it means that it is covered in B and it is covered in
Madam,
Ah.
why this is called as particular average? Madam, it's nothing but loss being
Partial loss, sir. கொஞ்சம் மெரீன்ல கொஞ்சம் பந்தா காமிக்க வேண்டாவா? நான் சொல்ல டெர்மினாலஜி தான் கொஞ்சம் மாறும். மத்தி ஒண்ணும் இல்ல, ஒரு பெரிய படம். ஆவரேஜ்னா லாஸ், பர்டிகுலர்னா பார்ஷியல். சும்மா மெரீன்னா கொஞ்சம் பந்தா காமிக்கணும்ங்கிறதுனால பர்டிகுலர் ஆவரேஜ்னு சொல்றாங்க. இட் இஸ் நத்திங் பட் பார்ஷியல் லாஸ்.
Ma'am, general average you told 3 points, no ma'am. Contribution, what are the other two, ma'am? Before slide you had told.
Sacrifice, contribution, expenditure. In the example இப்ப சொன்னாங்க இல்லையா, A, B, C, அதுல A has been sacrificed. Okay. B and C will be contributing. And the whatever is the expenditure we are incurring in storing, loading, unloading, that becomes expenditure. Okay. A oda part வந்து, if he is going to his insurance company and he wants claim for that throwing of that is the jettisoning of his cargo னு வெச்சுக்கோங்க. A will have an insurance company, B will have an insurance company, C will have an insurance company. A is going to his insurance company and he says that my cargo have been jettisoned because of the insured peril. There was a very strong weather. Because of that, there was a hole in the vessel. So my the goods were thrown out. So I want a claim. Immediately, the insurance company will ask, anyway, you will get it from general average. No, yeah, I might get, but it will take a very long time to get my general average settlements. So what I will do is, I will subrogate all my general average rights to you. You pay my claim now because I want a claim now itself. General average might take 3 years, 4 years time to get settled. Okay, because average adjusters la vandu adla settle pandradhukku. So at that time, whatever is the claim settled by the insurance company of cargo A, that is known as general average sacrifice. Then what he will do is, he will get subrogated to all the rights of the general average, that is cargo A, and he will get whatever proportion due from B, C vessel, everything. Okay, this is known as general average sacrifice. General average contribution means this B and C is contributing for that general average. They will not keep quiet. What they will do is, they will go to their insurance company. ACR, there was a danger in our ship. So some other cargo was thrown into the ship and I was made to pay for that A. So there is a loss for me. So you pay that. That is known as general average contribution. That contribution also he can get from his insurance company. Whether that is whatever is the loss that has taken place, that cargo also can go to his insurance company and get his share of loss as sacrifice. The other interests which are contributing, no, those things, because we cannot say these are all not small amounts. Maybe that A, that worth is 1 crore. It is being bifurcated between 4 interests. Then each and every interest share will be 25 lakhs. 25 lakhs is not a small amount. So what he will do is, this A, he will go to his insurance company and he will have his claim of 1 crore as general average sacrifice. He will get his claim amount. He will go happily. This insurance company will get to the that is the rights against this B, C and D. Now this B, C and D has to pay 25 lakhs each. Is that not? So for that is that 1 crore will be apportioned between 4. That A might be cargo owner, B might be cargo owner, C might be cargo owner, D is hull owner. Say for example, we are having it like it, and for our hypothetical case, we will say that all the 4 are being bifurcated equally. But it is up to the value only we are going to bifurcate. But for our example, we will take it as being bifurcated equally. In that case, whatever is the contribution made by B, 25 lakhs, he will go to his insurance company and get reimbursed for that B alone as the general average contribution. C will go to his insurance company and he will get indemnified for that contribution. Okay. And then apart from this 1 crore, this ship owner D, he might have incurred few expenditures. Say for example, he might have incurred some 20 lakhs as port charges and warehouse charges in the intermediary port and even the repair charges. Those 20 lakhs again will be bifurcated among the 4 interest. So now A will get general average sacrifice claim for 1 crore and 5 lakhs as general average contribution. This expenditure is also again contributed. Okay, that is what is known as expenditure, sacrifice, and.
Thank you, ma'am.
Madam, doubt.
Yeah, please.
Madam, madam, the bifurcation between the interest, அதாவது அது ஈக்குவலா டிவைட் ஆகுமா?
ஈக்குவல் ஆகாது. நான் சும்மா
வேல்யூ
கண்டிப்பா அவங்களோட வேல்யூ இப்ப வெசலோட வேல்யூ crore கணக்குல போகும். ஒரு கார்கோவோட வேல்யூ வந்து 10 lakhs தான் இருக்கும். இன்னொரு கார்கோவோட வேல்யூ 1 crore இருக்கும். So it will be apportioned according to their value of interest. So இப்ப ஒரு கோடி போச்சுன்னா இப்ப 10 lakhs தான் ஒரு another cargoவோட வேல்யூன்னா அந்த 1 கோடி into 10 divided by total of all interest. ஓகேவா? So it is proportionate தான்.
Thank you.
A ஓட இன்ட்ரெஸ்ட் A ஓட வேல்யூ எவ்வளவோ எடுத்துப்போம், B ஓட வேல்யூ, C ஓட வேல்யூ, D ஓட வேல்யூ எல்லாத்தையும் ஆட் பண்ணிப்போம். ஓகே, so நம்மளோட நம்ம வேல்யூ divided by total value into whatever is the sacrifice amount, and அதுதான் that will be paid by that interest. So it will be apportioned according to the value தான்.
Okay.
நான் சும்மா எக்ஸாம்பிள் क्वेश्चन அப்படி சொன்னேன். 25 lakhs. Okay, there are so many. Yeah, please.
And ma'am, if 9 people are there and plus 1 share for that ship owner also, no? Then 9 cargo plus 1 hull.
Yeah, 9 cargo plus 1 hull. Yeah, they have to share. Yes, even hull will share. 9 cargo plus 1 hull will share. Okay. Then expenses. There are so many expenses which are being payable apart from the cargo value. Loss minimization expenses, that might take fuel and labor charge. Sir, somebody is having their mic unmuted. Can you please mute it? Yeah. Fuel and labor charges, particular charges, salvage charges, and forwarding expenses. These are all the loss minimization expenses, and we will see what is the difference between fuel and labor, particular and salvage in the next screen. And then recovery rights, those expenses also we will pay. And extra charges, here actually we have to keep it in mind that generally surveyor is being appointed by insurance company. In practice, what may happen is we are appointing the surveyor and he is saying that the claim is not admissible, but still we might pay the survey fees because it is appointed, and because of those clientele relationship, all these things, we might say so many blah blah blah. But theoretically and technically we should not pay the survey fees once the claim is not admissible. So for examination purpose, you will have to keep it in mind that survey fees is payable only if the claim is admitted. It is not payable even if it is admissible. That is because of excess or something like that, it is not payable, doesn't matter. But the claim should be admissible, then only survey fees will be paid. So in any if they ask for any problem in exam, you will have to add that survey fees also along with that, and you will have, because generally in marine survey fees will be paid by the client and we have to reimburse to the client along with the survey fees. Okay, so these expenses or these extra expenses are charged only if the claim is admitted. So now comes fuel, labor, particular charges, and salvage charges. Generally we get confused. What is this? Everything looks alike. So I'll just tell you one small hint to remember this. Actually, it is just to have in our remembrance only. Please don't take it otherwise. Fuel labor is like paying for our own employees. Say for example, we employ our substaff to come to our office and clean for our puja. So now in the recent thing, the puja is coming, or for New Year or something like that, we are asking them to come and clean on Saturday. Then for their coming to office on Saturday, we are paying voucher. Okay, if they have not done that cleaning properly or they were not able to do that, okay, but still we are going to pay whatever is due for them. We are not going to deduct that only 2 rooms you have done here, you have not done record room, or you have not done properly, like that we cannot bargain with them. So for the effort taken by them, we used to pay that. So that is known as fuel and labor. Fuel and labor is for their own, that is the ship owners employees, that is whoever is the crew of the ship, the amount paid to the crew of the ship to avert the loss or to minimize the loss, whatever his extra steps he is taking, for that he is being paid. Oh, that is for over time, or for that extra wages he is being paid, then that becomes sworn labor. Okay, so it is incurred by either the insured might be hull owner. Okay, if a hull is being covered, then the insured will be the hull owner. Or if the cargo is covered, then insured might not be hull owner, but still who will be doing those services? Only the hull owner servants. Is that not? So if it is incurred by the crew member of the hull, then it becomes sworn labor. If it is done by a third party, if we are outsourcing our cleaning, okay, to a third person, then that becomes salvage. In that case, what we will do? We will ask that outsourcing person to come on Saturday, and then he is cleaning. Then what we will say? Hey, I will pay 1,000 rupees for cleaning everything pakka. If he has not done his work properly, then what we will say? We will not pay 1,000. We'll say, hey, actually, I wanted you to clean that room also, but it has not been done, so I will pay only 800. So like that, we will we can reduce. Is that not so? That is third party, because with our employees we are paying for the effort taken, but from the third parties we are seeing to it that the work is done properly. So likewise here in sworn labor, as they are employing the ship owners crew themselves, just their effort is enough. So even though if there is any loss, in spite of all those efforts, the cargo is a total loss or the vessel is a total loss, still we will pay that sworn labor charges. Okay, so the ship has taken some, that is the carrier has taken some measures to avert the loss, and he has incurred some expenses. But still, in spite of that, it has become a total loss. Then the insurance company will pay for the total loss, and apart from the total loss, we will pay the sworn labor charges also. That is the importance of sworn labor. But in case of salvage, it is also incurred for avoiding the loss or minimizing the loss or making the subject matter safe, but it is independent of employment contract. So it is from third party. That is why it is on no cure, no pay basis. If it is total loss, then we will not pay for salvage charges. But only part of the cargo is saved, then we will pay only for that part which has been saved. Whatever is the part that we have lost, we will not pay salvage charges for that. Okay, so that is why under insurance is there, and it will not be paid beyond the sum insured for salvage charges, but there is no under insurance, and we will pay in addition to sum insured also. Say for example, our sum insured is 1 crore, but they have incurred 10 lakhs to avert the loss. Then we will pay 1 lakh as total loss and 10 lakhs as sworn labor. So there is no excess also, and there is no franchise also. But sworn labor and salvage we understood. What is the difference between sworn labor and particular charges is, sworn labor, if these expenses are incurred short of destination, then that becomes sworn labor. If the same expenses, if we are incurring on the port of destination, then that becomes particular average. Okay. It is also in addition to sum insured payable. Even in case of total loss, particular charges are payable. So this is the difference between sworn labor, particular charges, and salvage. Only thing we have to keep it in mind is whether it is for their own employees or outsiders. Their own employees means either salvage charges or particular charges. Outsiders means salvage. Sorry, okay. It is their own employees. Whether it is incurred port of destination or short of destination. If it is short of destination, sworn labor. Port of destination, this particular charges. Finished. That's all. If it is their own employees, no under insurance. If they are their own employees, payable even in case of total loss. Salvage charges, it is subject to maximum of sum insured, and in case of total loss, we will not pay. That's all. So if we keep it in mind, then it will be very clear. I will share this. If you see it afterwards, you will understand furthermore. Then what is duration of cover? Because duration is also very important, because from the time, generally we say it is warehouse to warehouse. It means that because we do not have period of insurance in our policy, so duration means from the time it leaves the warehouse and continues during the ordinary course of transit. That word is very, very important. If it is taking some extraordinary deviation, it has to be brought to the notice of the insurance company, and it continues during the ordinary course of transit and till it is delivered to the buyer's warehouse, or from the date of 60 days from the unloading of consignment in the final destination port. So the 60 days means it is for C cover. C, that is ICC A, B, C. It is 60 days. It means that it is 60 days from the date of unloading of the cargo in the port of dispatch. From that date, within 60 days, it has to be brought to the buyer's warehouse. It is not that on 60th day it can leave from the port premises. It is not that within that 60th day it has to reach the buyer's premises. If it is not so, then on expiry of 60th day, our policy will come to an end. Okay. So this is ICCC. And then 30 days for air cargo. Same thing, 30 days from the unloading of cargo in the airport premises. Within that, it has to be taken delivery by the buyer and it has to reach the buyer's premises, or else our cover will cease. And for VAR, that is for rail or road, it is 7 days. And for VAR, it needs much more explanation. It is 15 days. That is, we know VAR is a waterborne. VAR is waterborne means even for air we are giving, but still we use the same word, that is VAR. That is, waterborne means it will be covered only during the export or import. That is, it is only during overseas transit. It is covered only during overseas transit, whether be it air or be it water. It is covered only during overseas transit. Okay, so in that, what they are telling is 15 days. What does it mean is 15 days from the time the vessel has, that the overseas vessel has reached the port of destination. As soon as it is unloaded, the cover for VAR ceases. Okay, because VAR cover is only when the cargo is on the overseas vessel. That we have to keep it in mind. So on arrival of consignment means on arrival of the vessel. On arrival of the overseas vessel to the port of destination, from that date, from that midnight of that date, 15 days cover is there for VAR cover. If within 15 days unloading has taken place, then the cover will cease. If still on expiry of 15 days, the unloading has not taken place, on expiry of 15th day, our VAR cover will cease. Understand? So 15 days from the date of arrival of overseas vessel to the port of destination. So only when the cargo is on the overseas vessel, it is covered. If it is being shifted to the barge or tramp, which is being brought to the that is the port, because sometimes overseas vessel will be on the mid-sea that cannot enter the port because the port may not be that deep. So small vessel will go and get the cargo. So during that time, as soon as the cargo has been shifted from the overseas vessel to the barge, immediately our VAR cover will be only for mines. That is, it is not for bomb or it is not for some gun shooting. All these things will not be there, only for mines which has been kept under the water. Only blast of mines are covered for 60 days. So VAR cover will not be there for the cargo which has been shifted to barges. And sometimes what may happen is, it is not that from this port to that port it will go straight. It may even go to intermediary ports. In those cases also, if the cargo is being unloaded for any reason in the intermediary port, cover for VAR will not be there. But if the cargo is there on the overseas vessel, but still before 15 days from that intermediary port, the ship takes it travel further. Say for example, from India to US it has to go. In the middle, it is taking its berth in Singapore to take more cargo from there. Okay. In that case, from Singapore, it should have started before 15 days on reaching the Singapore port. If that be the case, there will be continuous cover for VAR. If the cargo, that is the vessel leaves on 20th day of reaching Singapore. So in that case, The war cover will be from the time the overseas vessel leaves Indian port, and it is throughout the transit from India to Singapore, and as soon as it reaches the port, while on overseas vessel, because now the cargo is not shifted, it is there still in the overseas, because it is meant for US only, so it is not being downloaded, it is on the overseas vessel. In that case, it will be, the war cover will be up to 15 days on the Singapore port. From 16th day to 20th day, there will not be any war cover, and on 20th day it leaves Singapore na, so from that date onwards again the war cover reattaches. And again, on reaching US, again another 15 days will be there. If it is not being unloaded within 15 days, then up to 15 days cover will be there. Okay. So this 15 days cover is sanctity of war cover, because war is waterborne. It will be covered only if the goods are on board the ship. Okay. And on board.
Madam, one doubt, madam.
Yeah, please.
If it is air, it is still in the flight. It shouldn't have.
அதுதான் சொல்றேன், அதான் வாட்டர் போர்ன்னு சொல்றோமே ஒழிய ஏர் மாதிரி தான், ஐ மீன் சி மாதிரி தான் ஏரோ. இட் ஷுட் பி ஆன் தி ஏர்கிராஃப்ட். சே ஃபார் எக்ஸாம்பிள், சென்னையில இருந்து நீங்க யூஎஸ் போறதுக்கு முன்னாடி சேம் திங் யூ ஹேவ் இட் அஸ் ஏர்கிராஃப்ட். சிங்கப்பூர்ல போய் அது கொஞ்சம் ஒரு நடுவுல ஒரு டிரான்ஸ்ஷிப்மெண்ட் நடக்குது. இன் தட் கேஸ், while it is on overseas aircraft, it is covered. On up to 15 days in Singapore, it will be covered. 15 days வரைக்கும் mostly airல எல்லாம் நிக்க மாட்டாங்க. பட் இன் ஸ்பைட் ஆஃப் தட், நான் சொல்றேன், ஒரு ஹைபோதெட்டிக்கலா ஒருவேளை சிங்கப்பூர்ல இருந்து 15 நாளுக்குள்ள அந்த ஏர்கிராஃப்ட் கிளம்பல அப்படின்னா, பட் ஏர்கிராஃப்ட் குள்ள தான் இருக்கணும் அந்த கார்கோ. மோஸ்ட்லி ஏர்ல வந்து டிரான்ஸ்ஷிப்மெண்ட்லாம் இட் வில் டேக்ஸ் 3 or 4 hours. ஓகே, அவ்வளவுதான். அப்படி இல்லைன்னா அவன் ஏதாவது ஒரு கார்கோ சேர்த்துக்கணும், அதை சேர்த்துட்டு அப்புறமா அப்படியே கண்டினியூ ஆயிடும். மோஸ்ட்லி 15 daysலாம் வந்து இட் வில் நாட் ஹேவ் இட்ஸ் பர்த் இன் இன்டர்மீடியரி போர்ட். பட் ஸ்டில் ஹைபோதெட்டிக்கல் சிச்சுவேஷன்ல இது பண்ணா நீங்க வெசல் எப்படியோ அப்படியே தான் ஆயிரும். அந்த 15 days cover is there when it is in overseas aircraft.
Madam, please give some clarity on this duration cover of 15 days.
Sir, I will just tell you again with the same example. I will explain it. Say a cargo is meant for transit from Chennai to US. From Chennai, it is loaded on to the overseas vessel. Only when the overseas vessel leaves Chennai port, the war cover commences. Okay. Then it is from here to US till it reaches US, it will be covered. It will be there. Okay. Say for example, it goes to some intermediary port to have some more cargo to it. So it reaches Singapore port. At Singapore, this cargo has not been unloaded. Then there will be cover because it is still on overseas vessel.
Okay, on board. Okay.
So if within 15 days of reaching Singapore, if that vessel makes its transit towards US, then there will not be any break in war cover. There will be continuous war cover.
Okay, fine.
If, say for example, it is not able to sail before 15 days, it makes it sail only on 20th day, then on expiry of 15th day on reaching Singapore, okay, that is that the vessel has reached Singapore and it has taken its berth, no? From that date, that is from the midnight of that date, 15 days alone war cover will be there for our cargo. On expiry of 15th day, war cover will be suspended.
Okay, suspended. Okay. It's not ceased. It's not ceased. Actually, it is suspended.
Suspended. Only for 5 days it is suspended.
Yeah, right.
Then again, from the date the vessel leaves the Singapore warehouse, that is on 20th day, again it reattaches. Then it reaches US. Again, that 15 days. We will not say that put together 15 days, already you have lost that 15 days. Again, here you will not get like that, not. Okay. Again, how many intermediary ports are there? For every port, there will be 15 days.
15 days, okay.
And for the destination port also 15 days. Within 15 days, if it is not getting discharged, then there will not be war cover. That's all.
Okay.
Simple. Yeah.
Thanks,
okay.
Ma'am, this 15 days is common for sea, air, and coastal, right?
Yes, sir.
Okay.
திருப்பி சொல்லுங்க. Sea, air,
and postal.
Okay.
Okay. Right. Thank you.
What is it for 48 hours? Where I saw some 48 hours.
அது 48 hours இந்த cancellation.
ஓ அங்கேயா?
அதாவது உங்களுக்கு cancellation if you don't want war coverன்னு சொல்றாங்க அந்த cancellationக்கு வந்து 48 hours. It is not for that. Okay, so we have come to the end of this thing and then we will go to the next slide. So now we will see the way already we are the kadagadan patruvom. So types of policies, definitely it is very important because it is not. Hey, somebody tell me what is the functional key for slideshow, yeah? Because I am not go to that.
F5.
F5, yeah. F, huh?
F5.
F5, F5.
Varli F5 pota. Function plus y.
And one small doubt.
From
Yeah,
the beginning, it's
see, when we were talking of that under insurance for salvage charges, for earlier you were showing one slide. Generally, there is no under insurance for particular charge or sue labor charges, but there is under insurance only for which one more charges you said. Is premium paid separately for each and everything?
Illa. It is all inbuilt.
These
are all expenses which are payable. அதாவது இப்ப இது என்ன சம் இன்சூர்ட கூட தாண்டி போக முடியாது அப்படிங்கிறது. அப்படி பிரீமியம் இஸ் நாட் செப்பரேட்லி இது. அது எதுக்குன்னா சால்வேஜ் சார்ஜஸ் வாட் ஐ டோல்ட் unless he that is saves the good, that will not be paid. No. So in that case it will be compared with the இப்ப அதுக்கு பதில் நான் சால்வேஜ் சார்ஜஸ் நீங்க இன்கர் பண்ண வேண்டாம். நான் உங்களுக்கு வெறும் சம் இன்சூர்ட் மட்டுமே கொடுத்துட்டு போயிடலாம்ல. But say for example, our worth is 10 lakhs. Cargo is worth 10 lakhs. He is incurring some salvage expenses of 5 lakhs. And he is able to save that 10 lakhs. Then I am, that is as insurance company, we are saving 5 lakhs. That is why we are there. But he is actually, what do you say, he is incurring 11 lakhs. Adhikku we will pay that 10 lakhs itself. That is more viable for us. No, why should he?
Ma'am, slide show seriyacha shift F5.
Shift F5, yeah. Vandita.
Right, ma'am.
Yeah, thank you.
Thank you, ma'am.
Yeah, thank you so much. So types of policies. We all know specific voyage policy. It is for one transit only. That is specific voyage policy. Open policy, it is given for local transits. That is inland transit, and open cover it is given for overseas transit. And these things we can very well take from our book, because we are not going to devote much of our time here, because we have to see hull also. So open policy it is for inland transit, open cover it is for overseas transit. And then for inland transit, if it is between inter-depot transfer, then annual policy is issued, and it is also for 12 months, and there is no declaration is needed. Here there is no invoice, because both the depots will be owned by the one owner. That is, there will not be any sale or purchase. It is, say for example, like our Vasant & Co. Vasant & Co, he is having a warehouse at Tambaram, and he is also warehouse at T Nagar, and he is also warehouse at Rayapuram. So from Rayapuram to T Nagar, he is shifting some items. Say during our festival season, washing machine gets more sales in T Nagar, so he is out of stock. So he is getting some stock from Rayapuram godown to T Nagar godown. Then that transit is known as inter-depot transfer. So there will not be any sale or purchase, because the sender is also Vasant & Co, and the buyer is also, that is whoever gets, he is also Vasant & Co. Then it becomes inter-depot transfer. And so there is no declaration for that. So that is the maximum value at any one point of time. It is not cumulative of all the transits. Generally in marine, we have transit sum insured as cumulative of all the values at transit, but here it is the maximum value at any one point of time. It is like fire policy. That is why it is subject to reinstatement. Okay. If during one such transit, if the sum insured is found to be lesser than the value at risk, then that is the condition of average will be there. And so on one loss, then it has to be reinstated. Sum insured will come down, and so it has to be reinstated. All these are features of annual policy. And then special declaration policy. There is no special declaration policy invoked because nowadays people go for open policy only, because we can go for many number of increases in sum insured, and it is very flexible. But still, for the purpose of examination, we will know that there is a policy called a special declaration policy, which is given for only inland transit, and the minimum sum insured for that is 3 crores. For open policy and all, there is no minimum sum insured mentioned. So, and increase in sum insured can be done twice only in a year. Actually, the attraction here is the turnover and claims experience discount. Nowadays, there is no sanctity for discount in marine insurance. That is why it is not popular now, special declaration. Earlier, it used to be huge. That is why these discounts, the turnover and claims experience discount, had a big thing. So now people are not using special declaration, but still it is there. For theory, it is there. So it is quarterly declaration and adjustment of premium at the end, and only downward adjustment. Even for STOP, there will be a saying that it is a downward adjustment. What it means is, downward adjustment means at the end of the period, based on the declarations, if we find that the sum insured is less than the declarations, then we cannot increase the sum insured. But if the declarations are less than the sum insured, we can refund. That is, at any point of time after the policy period is over, based on the declaration, we cannot increase the sum insured and take the additional premium. That is, upward adjustment of sum insured is not allowed. Only downward adjustment of sum insured is allowed. Why? Because downward adjustment, no problem. Upward means it is 64 rupees, because already 1 year is over, all the transits are over. Now you are coming and saying that these declaration, because once the declaration amount it reaches the sum insured, on exceeding that sum insured, the policy will come to an end. Is that not? In open policy also, the sum insured, with up to that sum insured, many transits will happen. Once the sum declarations reaches the sum insured, he has to increase the sum insured. If he has not increased, then our policy will come to an end when the sum insured gets exhausted. So here also, if the sum insured gets exhausted, we will not take additional premium. He can increase the sum insured if he wants in the middle, but at the end of the period, after the period is over, that is after the period of insurance is over, he cannot go back and increase his sum insured. So only downward adjustment is possible, but upward adjustment is not possible in special declaration policy and even in STOP policy. Then special storage risk insurance. We already saw in inland transit, we have only 7 days cover. That is from the time it leaves the warehouse during the ordinary course of transit until it reaches, that is after it reached 7 days. Within that 7 days, it should have reached the buyer's warehouse, or else our insurance policy will come to an end. So sometimes what may happen is, in our inland transit, the seller has sent the goods. It has reached, say for example, from Mumbai, he has sent the goods. It has reached Chennai. It is there with ABT parcel service at Gindi. Okay. But the buyer, he has not taken delivery. Maybe the buyer is at Tiruvatiur. He has to come and take delivery from Gindi, but he has not taken delivery. 7 days gets over. So from on expiry of 7th day, our inland transit policy will cease. Is that not? Whether it be special declaration policy or whether it be open policy, it is not available for specific voyage and all. It is only available. This special storage risk insurance is only available for open policy and special declaration policy. So on expiry of 7th day, the policy will our open policy will come to an end. So from 8th day, if something happens, because the seller, he has not got any sale proceeds, so it is still, he is at risk. Something happens, some fire has happened to that ABT Maruti, or some like Chennai floods 2015, some big floods come and it actually spoils all the goods. So all these things are bound to occur, or that may occur. So in those cases, from the 8th day, he will be at risk. So he can take special storage risk insurance, which will cover the seller from the 8th day till it is taken delivery by the consignee. Once it has been taken delivery by the privative person, just it leaves that ABT Maruti warehouse, immediately our special storage risk will stop. Now that consignee, he is at risk and there will not be open cover also, there will not be special storage risk also. It is up to his lookouts. Okay. So this is known as special storage risk insurance. Duty insurance is, it is taken by importers very well because they only pay the duty, and there should be some CIF policy, then only we will give that duty insurance. Here the duty is it is based on pure indemnity and whatever he has paid. He might have taken insurance for 10 lakhs, but he has paid only 7.5 lakhs as duty. And after paying the duty, it has met with some accident. So the goods has been total loss. The goods has become total loss. Then he is indemnified up to 7.5 lakhs only and not for 10 lakhs as per sum insured. It is not an agreed value policy. Whatever he has paid, only that amount we will pay. And also, if there is any claim before payment of duty, say in the mid-sea it has happened because he has not paid the duty, but sinking of ship, there is no duty claim. Okay, so he should have paid, then only we will pay the claim under this duty. So increased value means the value of the cargo on reaching destination, it is more. Most likely, say for example, crude oil prices, they often change, or gold also change. And even say for example, hypothetically, we can take during this corona, all these sanitizers and masks and gloves, they have become very popular. And so maybe before they have been shipped, it was sold for 10 rupees. But after it has reached here, the value of the gloves has become 12 rupees. And it has also been notified by the government authorities that now, from now onward, the gloves price will be 12 because the market value has gone up. Then for that 2 rupees increase, that increased value insurance will take care. So, but it should be notified by the statutory authority. It is not real market value, but it is to be notified by the appropriate statutory authority. Then that increased value will also be paid apart from the loss from our marine insurance policy. Then seller's interest contingency insurance. In case of FOB and C&F, we have to see carefully here. We saw the seller's interest will be up to the FOB point. Yes, the seller's interest will be up to the FOB point. From FOB, it is the responsibility of the buyer to take insurance or on.
Excuse me, madam.
Yeah.
Madam, when will be this increase the insurance value policy taken?
By the importer.
During the course of, when, ma'am? During the course?
No. When he has taken when he is taking CIF, at that time itself he has to take that policy.
Okay.
In the middle he cannot, because pretty well knowing that it is going to increase, he cannot go and we cannot give also. It has to be concurrent. It has to be concurrent.
Ma'am, excuse me, 1 minute.
Yeah.
This duty insurance policy, can the seller take the policy in case if the Incoterm is X works?
If it is X works, what is the responsibility of the seller?
Seller
does not have any responsibility. Is that not?
Okay, only the buyer has the entire
responsibility. Only the buyer, the import license holder, he can take duty insurance.
Okay, ma'am. Okay.
Madam, this custom duty is mainly for the custom duty for the imported goods, no?
Yes, sir.
The excise duty, the manufacturer pays the excise.
Duty is that is even for inland transit, that will all come under invoice cost itself.
Okay.
Because excise cost it will be included in invoices. So that is why we are not talking specifically about excise duty and all.
Yes.
But import terms, this duty, it is apart from our invoice cost.
Yes, ma'am. Okay. Thank you.
Madam, will you please explain that duty insurance policy with an example?
Say for example, there is a cargo worth of 1 crore and our duty we are going to pay for that is 10 lakhs. Okay. So this importer, he has taken policy for sea transit also and also for duty.
1 crore.
Okay, for cargo as well as duty, he has taken insurance. Okay. So in that case, on receipt of the cargo at his warehouse, he just opens and he sees that all things have been damaged. Okay, it is due to sea transit. Okay, in that case, he is not only of loss of that goods, but also he has already paid the duty. He is loss of that also. Is that not?
Okay.
So he will be getting, if it is a total loss, he will be getting 1 crore plus whatever is the duty he has paid. Maybe he would have taken the policy for 10 lakhs, but he has paid only 9 lakhs as duty. Then he will get 9 lakhs. Or he has paid 11 lakhs. Then we will get some maximum sum insured of 10 lakhs. If before paying of duty, sometimes what would have happened is in mid-sea it has become a total loss. He would have paid the duty. Maybe he would have paid the advance duty also, but doesn't matter. For the goods which has not reached the destination port, he is not bound to pay duty. Is that not? Only for the item which has reached the port of destination, he will be going to pay duty. Okay. So that is why before paying duty, something happens and he is not bound to pay duty, means then our duty portion will not come into effect. Only the basic policy will pay for the loss or damage to the goods. Okay. Duty when will be paid means that the importer should have paid the duty to the customs authorities, and it is not refundable. Okay, then only we will pay. If there is any refund, then we will get subrogated to that refund. Insurance company will get subrogated to the refund.
Okay. One small doubt, madam.
Yeah.
This custom duty, as on date of my placing the order for the materials, it is say 10%, for example, I'm telling 10%. By the time it reaches the destination, my local port, it is the custom duty has been revised by the government to 10 to 25% or 20%. It is not under my control. So in that case,
but in that case, you should know. Actually, the thing is that is insurance. No, we will pay only if 10% of the sum insured. Okay, but what is the sum insured? That is what is the value? Say for example, 1 crore. 1 crore may 10% is 10 lakh. If
yes,
you have, if the sum insured for duty portion is only 10 lakhs, but but you are paying 25 lakhs, it is not the fault of the insurance company. You should have.
What I'm asking is whether any option for increasing the sum insured once the.
No.
Whether if I take additional policy for another 15 lakhs, whether that can be combined.
No, actually, it has to be taken while taking that policy itself. In the mid-view, cannot.
Because it is not because of me, it is because of the government regulation. The rate has given increased.
There is no procedure as such.
Okay, ma'am. Okay.
Yeah.
Madam, in most of the time, what happens in a project policy?
Sir, I am not getting you, sir. It is not audible.
In a project policy, most of the times, what happens, madam? When the initial project is all the important imported machineries are been ordered, so there is a constitutional duty levied, and subsequently, if claims takes place, then the levy will be turned into original levy. Suppose there is a nil levy or 5% levy constitutional, and when the claim comes, the levy will be charged. That is, a custom duty will be charged at 10% or 50%. And what will
sir, your voice, sir, your voice is not clear, sir. Can you please make it more clear? Hello.
Hello.
Yes.
Ashish ji.
If it is going to be a practical session, then we will have our discussions later, sir. Then or else.
Hello.
Okay, proceed, madam.
Yeah, okay. Because we will have actually I will give number. If any practical thing, we will discuss later. Because
no problem.
Yeah,
no
it
problem.
is. But also our audio is not clear. That is why. Okay. Yeah, it is already 12:45. We'll make it fast.
No problem.
So seller interest. Actually, I told you, no, it is FOB means the buyer has to take the insurance. Okay. So in that case, the seller, he is at risk till he gets his sale proceeds. Is that not? Sometimes what may happen is the buyer, after the consignment has reached the destination, he would reject, or he has become insolvent, or or he is dead, or something like that. He is not, the payment has not received, and he has rejected the goods. The goods have been rejected. So now the seller has two options. One is that he has to bring those goods to his place. That is, he has to bring back, or he has to find alternative buyer there. If he brings back, or that will not be covered under seller. Many people, we think that seller's interest means if he rejects, he is taking back, that taking back portion will be covered by seller's interest. No, it is not so. For that reverse journey, he has to take a separate insurance policy only. What seller's interest contingency covers is, in case of FOB, the seller's interest actually gets seized on FOB point. But after reaching the destination, it is found that the buyer has not taken delivery and has rejected the goods. But now we come to know that already some loss has happened mid-sea, or loss has happened during unloading. Something has happened. There is some physical loss or damage by the insured peril. That is by fire or explosion or loading or unloading or perils of sea or something, for lightning. There has already been a physical loss or damage which has taken place between the FOB point until it has reached the destination, or after reaching the destination also. That portion will be taken care by the seller's interest contingency insurance. That is, it will take retrospective cover, because already my insurance, I was having insurance up to FOB point. So from that FOB point, the seller's interest contingency insurance will give retrospective effect. So if there is any physical loss or damage, there will not be any other policy. So the seller's interest contingency will take care of that loss which has occurred. Okay. So this can be given for FOB and C&F sellers only. Then what is buyer's insurance contingency?
Madam?
Yeah.
Madam, from FOB point to the destination, will not the buyer will have some insurance? Will not be covered under his insurance?
That is what now the buyer has rejected. It cannot be, the policy of the buyer cannot be assigned to the seller. Only the seller can assign his policy to the buyer. And also in FOB, there is no condition that the buyer has to take insurance. He would have taken or he would not have taken. Or even if he has not taken, the buyer already has not become owner at all. How can he transfer his insurable interest to seller?
Okay, madam.
Okay, actually we think that on FOB point it has gone to the buyer, but the buyer is rejected. Then there is no cover. Whatever policy, even if he had taken, the buyer had taken, he cannot, because he is not interested in taking the cargo. If that be the case, will he be giving that insurance to you?
Oh, you mean that even though he has an insurance and he got a claim, since he has not acquired interest in the goods, he need not pay back to the seller.
Yeah, how can he get the claim? That is, say for example, he is having a policy. Okay. We do not know whether there is a physical loss or damage to the cargo. Many times we will get to know only after opening that package. Is that not?
Okay.
If it is sinking, or if it is something like that is lost due to rain or something like that, we will get to know. Okay. Many a times the loss would have happened, that is the breakage would have happened, but we will not know from outside. Okay. And without even seeing, there might be some package, some marks will be there in packet. Okay. We are not, but the buyer, he is not at all interested in taking the goods.
Okay.
If he is interested, then he would have got the claim from his policy, his insurance company, and he would have paid it to the seller. But here in this example, that is this buyer, he doesn't want that cargo at all. So he is not bothered about the claim also.
Okay, okay.
He is rejecting. That is why.
Okay, ma'am. Thank you.
Okay.
Ma'am, just one added point. He said the buyer has the option to either make the claim or reject the supply.
Actually, if he wants, actually it is not about, but here the buyer does not reject because it is a damaged cargo.
Okay. For some other reason.
Whatever is the reason. If it is damaged cargo, then he might go to the insurance company. But before knowing whether it is damaged or lost, he rejects, or he becomes insolvent. He is not in a position to pay.
Okay, ma'am. One question is, you said,
Madam, even if in delay, he can also.
1 minute, sir.
Say for example, delay. I want this goods to be, say for example, I have ordered greeting cards. I want it before 15th of December, but it reaches by January 15th. So I reject.
Right.
It is the contractual obligation between the insured and the insurer. But that delay anyway, the seller interest contingency will not cover. Only physical loss or damage I will cover.
Ma'am, you are telling that he has become financially insolvent. But the rule is only physical or loss or damage to the insured peril
That is
only.
what, yeah, his reason for rejection only I am telling. I am not telling insurance claim will be paid.
Okay, yeah.
That is, what I told is the buyer can reject the cargo for some reason. It might be that he doesn't want a relationship with that seller. Maybe he has become insolvent. Maybe he is not interested in the cargo, or maybe it has reached late. Anything may be the reason. Only for the purpose of insurance, you just imagine that the buyer rejected the cargo. Whatever may be the reason, he rejects, and the insurable interest now is with the seller. Now our seller is in trouble. Now he opens the goods and he sees that there is a physical loss or damage due to insured peril.
This you are telling while return journey.
Not return journey.
Okay.
Return journey is a separate contract. Say, for example, from Chennai to US, I am sending. I am the seller at India. I have a FOB policy, and also I have a seller's interest contingency insurance. At US, my buyer has rejected. From US to Chennai, if I want to bring back, that is a separate policy. Okay, specific wise I have to take so that it will take care of the return journey. Okay. This seller's interest contingency insurance will cover whatever the loss that has taken place from Chennai port till US. That may not have my knowledge.
Okay.
Because as it is, FOB does not cover, but the seller becomes responsible because the buyer has rejected. Or else it would have been at the headache of the rejects cargo, then it becomes the interest of the seller.
No, but excuse me. Yeah. But where is the question of somebody opening the parcel or the cargo and saying?
Why not? Say, for example, he is actually finding another buyer. He says, okay, I will buy the product, but I want open delivery. I do not know. I should know whether the consignment is in good condition or whether it is up to my expectation. Then I will take the goods, he says. And he is opening the consignment there itself. In port premises itself, they are arranging for open delivery.
In that case, it is okay. But in case he is become insolvent.
For example, he has become insolvent, yeah, but he has not, and our seller has not found the new buyer also. But we came to know that because before I want to return journey also. For return journey, I am asking for insurance. At that time, the insurance company says, okay, I just want to have a pre-inspection. At that time, we see that the packets are in a damage. That is even the outward packet. From that, I come to know that it is in a damaged state. Okay. Outward itself, I come to know that it is in a damaged state. The packet is torn or something like that, or it is damp or something. Okay. So either I have to see for a new buyer or I have to get it back. In any case, I saw that it is in a torn condition. So I think that there should have been some damage which has taken place during transit or during unloading. So my seller's interest contingency insurance will take care if it is due to insured peril. If it is not due to insured peril, he will not get any claim at all. Okay.
Yeah. So, madam, I mean the buyer has rejected the cargo, but there is no signs of any loss or damage to the cargo. So this policy will not come into the effect.
No. Only physical loss or damage due to insured peril. Yes. Okay. For mere rejection, it is not loss.
So no financial default is covered.
Yes. That is why delay also we are not covering. Why we are not covering delay? Because we cover only physical loss or damage to the cargo due to insured peril. In delay and all, I have so many problems. We cannot. After this, we will go to those problems. Then I will not be able to see the hull portion. So what I'll do is I will rush it through these types of policies, and then we will see the problems, because hull there is no much thing to see. Okay. So in those.
Sorry to interrupt. Why don't we have one more session also instead of rushing through?
That is up to the association to decide and you people to decide.
No, it's possible we'll have it next week. Madam agrees. Madam is
See,
very.
this is
No,
a very
we'll be
No,
happy
no.
to have one more.
Madam also has to prepare. She is also appearing for
yeah.
scale 4.
So in that case, we can go a little slow and complete as far as possible, and
No,
then
let her complete. We'll have one more session next week. What? No, either way, whatever everybody feels like, we'll have it.
Madam is thorough.
No, Madam
yeah,
is
we
thorough.
need it. Be good if we
too much.
No, it will be better if we have one more session rather than rushing through the remaining portion. No.
Sure.
That is what
Whatever you all feel, we'll have it
Okay.
that way. And 2 o'clock we have HR class.
Yeah,
So
that is
Madam,
why I'm saying. See,
exactly.
definitely she has to rush through now.
Yes.
It's already one. So knowing the magnitude of the subject, we know it is little difficult for her to complete. Okay, so I think we have to work for another session, subject to everybody's interest.
Okay, now we will see
Thank you.
what is, so we have seen seller's interest contingency insurance. And here, actually, I was talking about the delay. Delay, actually, it doesn't mean any physical loss or damage. That is why delay is not covered. Just mere delay, it is not at all, it can be covered because there should be physical loss or damage due to insured peril. Even if it is caused, delay is caused by insured peril. Say, for example, there is a riot or there is a flood or there is some climatic problem or there is a piracy. Because of that, they are taking a different route and they are reaching delay. Because of that, some perishable goods, they are spoiled, or we say no, within this time I should have received this greeting card, but before 15th December, if I get that greeting card, I would be able to sell during New Year time, but I am getting those New Year card after January 15th, so it is of no use. So that delay has caused me economic loss, but there is no physical, that those cards are intact, then it is not covered. That should, because of flood, those cards should have been damaged. Because of riot or strike or rioters or strikers, there should have been some physical loss or damage to the cargo insured, then only that delay will be covered. Likewise, here also rejection of cargo as it is not covered. Because it has been rejected, the loss or damage which has already taken place due to the insured peril, we will not know who will be at who will be paying, because the seller, he is an innocent seller who does not know that buyer will reject. So the buyer has now rejected, but there has already been a loss or damage which has already taken place. Maybe it has already sunk also. Say, for example, actually the transit has started from, say, for example, on 1st of July it has started. So on 5th of July, it has already sunk. But before the information of sinking come, on 6th July, he has rejected the cargo. He says, I don't want to continue this thing. So the loss has occurred after the FOB point, but the buyer has rejected the cargo. But there is a sinking of ship, and because of that, the cargo has faced the physical loss or damage. Then it is an insurable loss, but the FOB policy will not cover, because the FOB policy would have come to an end on FOB point. The seller policy, buyer's policy will not also help, because the buyer has already rejected the thing. So the seller's interest contingency insurance will take care of this loss. Okay. So now buyer's contingency insurance. Then what is buyer's contingency insurance? That is, if buyer is a CIF, who will have to take insurance? The seller has to take insurance. Actually, the condition says that seller has to take, but it doesn't say that it has to take all risk cover. Okay. So sometimes what may happen is the seller would have taken ICCB, ICCC, or he would not have taken VAR, or he would not have taken SRCC extension or something like that. Okay. So in that case, the buyer might not get all risk cover. So he has so many sellers across the world. So he cannot just go and see each and every cargo policy, and whether he has to get confirmation all risk have been covered, or whether VAR is covered, whether SRCC covered. Like that, he cannot go and see all these things. That is why the buyer, he will take buyer's interest contingency insurance policy, so that if the seller's policy does not take care of his interest, then this policy will come to, but still that those things are subject to insured perils only. It is not that all the things will be covered, only insurable, like fire, lightning, earthquake, or SRCC, VAR, all these things, loading, unloading, these things only can be covered by buyer's interest contingency insurance. That is whatever the seller's policy, he has assigned that, it has come to the buyer's name, but still that policy does not have that coverage, then whatever is left, that will be taken care by the buyer's interest contingency insurance policy. Exports incentive insurance. Exports incentive insurance means for any export, the exporter might get incentive. That is invoice plus export incentive plus 10% will be our sum insured. Because in case of exports, if I am losing something, if I get only invoice cost as my compensation, then I will be at loss. So that export incentive also I should get, then only I will be properly indemnified. So that export incentive, it can be covered under this portion. Then package policy for duty exemption. That is when duty is exempted is when some raw materials are imported and it will be processed here and it will be again exported to some other country, then I might get duty exemption. In these cases, there is a package policy for inland transit, storage and processing, that is the fire risk, and also outward transit up to onboard the vessel. So this is a package policy which can be given for duty exemption goods. So that is also like fire policy. So it should represent the market value of the goods and it is pure indemnity and reinstatement should be done after settlement of claim. Then FOB cover. For FOB and C&F sellers, inland transit rail or road plus storage cover at port and loading, including sling loss. Cover and it means that inland transit rail or road plus storage at port and up to loading, because FOB is up to onboard the ship. So it is a modified version of inland transit. So it covers the loading portion into the overseas vessel also. Then STOP. STOP means stop policy. It is sales turnover. Actually, because the insurance, that is the insured, he has so many transactions, imports, exports, and even within India, he has so many sales and purchases. And so he doesn't know, or he cannot, it is not that he doesn't know, he cannot do all the insurances separately. So he wants an umbrella cover. So we can have turnover as our basis and we can give policy. And for that, the company should have been registered under Companies Act. Actually, our company may say this is the minimum sum insured for which STOP can be given, but it is not common for all the companies. That is why we need not know which is the minimum sum insured and all. So the sum insured should represent the estimated annual sales turnover. So whenever he wants, he can increase the sum insured in the midterm, because every quarterly he would know what is the turnover, quarterly turnover. So on knowing the quarterly turnover, he will know whether it is an upward trend. So if it is so, he can just revise the sum insured upwards also. So it covers the exports, imports, domestic sales and sales returns, then domestic purchases, purchase returns and interdepot transfers. All these things can be covered. And if there is any capital machinery, okay, that has to be separately mentioned. It is not because it in turnover capital items does not come, because turnover does not form part of capital goods, does not form part of turnover. That is why capital goods have to be separately mentioned. So it can cover, but it has to be separately mentioned. Okay, so the capital machinery, say for example, we are manufacturing the yarn. In that case, that yarn becomes the turnover. That is, the cost of yarn becomes the turnover. But the machine which is used to prepare that yarn, that is the capital goods. If we are transporting that machine from one place to another, that can be covered under a separate marine policy, or it can be included under STOP policy by separately making an endorsement in that. So this is how STOP policy works. It from raw material suppliers, whether it can be indigenous or whether it is imports, everything, all the transits will be covered, or between the job worker premises and factory, or between the any other premises also, everything, all the transits, it will be covered. And then there will be two values, one is turnover and the another one is value in transit. Turnover represents the overall sum insured based on which the premium is charged, value in transit is the maximum liability of the insured per transit. So it has to take care of the maximum value. If it is not sufficient, it has to be revised every now and then. And then
can you please repeat that point?
Turnover represents his sales and purchases per year. Okay, so his turnover might be say for example 100 crores. Okay, that is he is making purchase, sales, everything. It comes to 100 crores. That is his business is 100 crores. Okay, but for one transit, say for example he is exporting his goods, it might be for 10 lakhs. For importing his raw materials, it might be for 5 lakhs. Between inter-depot transfers, it might be for 2 lakhs. So every transit, each and every transit, it should be within that value in transit. He has to give one value in transit. That will be the maximum value, like our money in transit. What will be the maximum value in transit at any one point of time? That value should be given by the insured. So there will be turnover also, and there will be value in transit also. Premium will be calculated based on turnover. That is, our percentage will be applied on turnover and premium calculated. Value in transit will be the maximum liability per transit. Say, for example, he has taken value in transit as 10 lakhs. But at some point of time, there is a loss. And at that time, they saw that the value was 15 lakhs. Then it is an under insurance, and only up to 10 lakhs we will pay for that. That is why there are two values. One is for premium and another one is the maximum limit of liability of the insurance company. Okay. And they may not need, they need not do declarations for each transit. So every quarter they have to give their accounts closing and all. They will be submitting all these turnover details to the insurance companies, and if need be, they can revise the sum insured. And at the end, because it is based on the provisional turnover, provisional premium is charged, and because of that, at the end there will be adjustment of premium. Here again, only downward adjustment is possible. Say he has taken for 10 crores. If at the end of the period we see that the turnover is 8 crores, then we will refund for 2 crores. But at the end of the period, if we say that the turnover is 12 crores, our policy will be for 10 crores only. For 2 crores, we cannot get additional premium from him. There is no upward adjustment. It is only download adjustment. So tail and transit, because these are all the things, that is the supervision and all. It will because we are not generally for tail end and all, we will take that photograph, and then whatever is needed. Here also it is there. It is because of stock, we will not say that if they are not going to, because we cover imports also. So everything will be taken care by that. So if it is, the import is also covered by us, there is no need for that tail end. But still, if they are not going to cover that, they have a separate policy for that, then tail end unloading supervision will be there. So excess and all, we don't need to this thing, because it is up to the insurance companies. So we don't need to see all those things. And now we will see how hull goes. Okay, so hull, actually there is nothing much in hull different from motor, because if we know motor insurance, then it is very easy for us to understand hull insurance, because whatever we need in motor, we ask for hull also. We ask for proposal form, and we go for vehicle inspection, and here also hull inspection, and we take photographs, and we take some insured evaluation from a surveyor, and then we ask for RC book, because hull also will have some registration certificates, and like how we see fitness certificate there, here we see the classification certificate, and then we ask for ISM endorsements, because ISM endorsement is like our pollution control board control certificate. Like that, we will have ISM and all, we will see later. And then all these things we will ask for hull also. So it is mostly like motor only. And even in claims, it is like motor because we pay n number of partial claims till our sum insured does not come to an end. Only difference is here it is again agreed value policy, so no depreciation is there. And excess also, for total loss there will not be any excess, but for in motor for all claims we will put excess, but in hull only for total loss we won't charge excess, but for partial loss we will deduct excess. And so what are the coverages? That is, I have just bifurcated based on convenience, for our convenience. It is act of God, earthquake, volcanic eruption, lightning, these are all covered. And then accidents, fire, explosion, aircraft damage, contact with land conveyance, dock or harbor equipment, nuclear installation break. It is not nuclear risk, we have to understand it. There might be few installations or some machineries based on nuclear power which is running in hull. Okay, that is in that vessel there might be few parts which is running on nuclear power. Those installations are covered. Okay, it is not nuclear risk which we generally see along with BOT. That is not covered. It is nuclear installation that is being covered. And jettison and any other accidents. And then maritime perils, piracy, theft, perils of sea, all these things will come under maritime perils. And loading, unloading, and while shifting of cargo, something happens, damage to the hull, then everything will be covered. Latent defect is covered, bursting of boiler is covered, breakage of shaft is covered. Here also boiler will be there for getting that hot water or something like that, or some pressure vessels there might be there. So those things will be covered here. Barratry means like malicious damage. Barratry means whatever is the that is knowingly he doesn't like his master, that is he doesn't like his owner, so master wantedly he wants to make loss for his master. So those things are known as barratry. Or negligence, by carelessness he would have done, or negligence of repairers or charterers. All these things will be covered under hull policy. And other than these, some other coverages are also there, like salvage, general average, fuel and labor. What is pollution is, it doesn't pay for the pollution liability, but our ship is stranded. Because of that, some pollution might happen to the environment. So because of that, the government is asking us to destroy or damage the vessel. In that case, we are damaging our vessel. That value of vessel only will be given. It is not the liability portion. It is again the loss or damage to the vessel only we are covering. But only thing is, due to what reason the vessel is being lost or damaged, because it is due to the
Pollution.
directions from the government of authorities in order to mitigate the pollution, then that becomes the pollution hazard. Okay, then collision, already we saw in detail about collision, how it is happened. Only thing is, hull policy will restrict itself to 3/4 of the liability of the insured. The balance 1/4 he has to get it from the P&I club. Even 3/4 of the legal liability cost also, legal cost also, he can get it from insurance company. And it is supplementary to a policy. So apart from total loss also. So it means that in case of total loss, if say for example the value of the vessel is 1 crore and he is liable to the other vessel for 50 lakhs. So we will pay that 1 crore also, which is the sum insured under the policy for the total loss of our vessel. And his liability is 50 lakhs, means 75% of that 50 lakhs we will pay. Okay, so apart from total loss also, we are going to pay for the collision liability. And whatever we are not going to cover under collision liability, that hull owner, he can go to the P&I club. It is just an association of ship owners. He can go to that club and he can get his share of loss or damage. Okay. Then, so by reading, you can understand all these things, whatever is not covered under our policy and whatever is covered under P&I club. And what are all the types of policies? Hull and machinery, already we saw all these things that comes under hull and machinery only. And disbursement insurance, it means the ship owner's expenses to run the ship. That is, he might have to incur few fuel expenses or food items or any maintenance expenses or crew wages, all these things, these will come under disbursement insurance. And freight insurance, that is in CIF and all also freight is covered, here also freight covered. What is the difference is, if the freight has been already paid by the cargo owner, then it will be covered by cargo owner under CIF policy. If it is not paid by the cargo owner already, the freight is due to be paid at destination, then that will be taken care by the hull policy. So what is premium reducing insurance is, just we have to listen carefully here. Premium reducing insurance means it is loss of premium against a total loss or constructive total loss. Say, there also insurance premium is covered in cargo also. Likewise here, premium portion of hull policy. Here the policy goes like this. Say for example, from 1st January to December 31st, we have issued policy covering the premium. Okay, premium of the hull. Then in that case, on 31st March, there is a total loss of the vessel. So in that case, from 1/4, that is 1st April to 31st December, there is no vessel at all. So there is no need for insurance cover at all. So whatever the premium that has been paid for the whole year, it is waste. So the hull owner thinks the period the vessel was there, I am ready to pay the premium. My vessel has become total loss on 31st March. So from 1/4 to 31st December, I don't need insurance, but I have already paid the premium. But hull policy will not return because already there is a total loss. Nobody will give the premium also, return the premium also after paying the total loss. So he will not return the premium because there is no vessel, because total loss is going to be paid under hull policy. So that's premium reducing insurance. It will take care of the premium portion for the period for which the vessel was not there in existence. So it will indemnify for the pro rata basis of the period. Say if the loss has happened on 31st March, then the premium reducing insurance will give compensation of this premium for the period from 1/4 to 31st December. If the loss has taken place on 15th June, then it will give compensation for 1/7, that is July 1st to 31st. So like that, it will get reduced monthly on pro rata basis. Okay, this is known as premium reducing insurance. Then ship repairer's liability. That is repairer, he is having ship in his control for repair, and whatever happens to that ship, he is liable to pay to the ship owner. That liability can be taken care by ship repairer's liability policy. It will be issued to the repairer. And likewise, ship builder. Mostly this shipbuilding will be done on taking special orders from the ship owners. So those things will be taken care by the shipbuilders insurance. Then charterers liability insurance. Charterers, they have to return. That is, charter is vessel owner will be there. Charter or the person who takes the vessel on hire. Okay, then he will engage that vessel for carriage of goods. So he will again employ it. Okay, so those charterers have to return the vessel in as is condition. It is nothing but like how our auto wala take it from financiers. So financiers are the owner of the auto, and auto wala is the charterer, and he is engaging it for transport of passengers. Is that not? So likewise, vessel owner is the owner, and charterer is the person who has chartered that vessel, and again he will employ that vessel for getting his profits. So this charterer has to return the vessel in pakka condition when he is that is the contract comes to an end. If there is some loss or damage, then he will be liable for that. So that liability will be taken care by the charterer's liability insurance. So he has to make good the loss or damage during the operations of the vessel, so that those things can be taken care by the charterer's liability insurance. Loss of hire insurance is nothing but it is taken care by the, it is like loss of profits, both loss of profits and loss of hire. It is like our consequential loss. Only thing is, if the ship owner takes, it is loss of hire. If the charterer takes, it is loss of profit. Okay. So because of loss or damage, I am not able to hire my, I am not able to give my vessel on hire, then it becomes loss of hire. Because of I have taken on charter, I am not able to employ that vessel and I am not able to take profit from that, then it becomes loss of profits. Then bar, we know it can be taken by insurance company. And then deductible, how it applies to partial loss, collision liability, general average, salvage charges. For total loss, it will not be applicable. Already we saw that. So then what are the specialities of hull insurance? Already say we saw it. Surveyor is a must. No condition of average, no depreciation. There is a term called depreciation in hull insurance, but it does not refer to the condition of average, or it does not refer to the wear and tear as being said in other policies. Depreciation means there is a loss or damage, but I can run the vessel without even repairing the damage because it is not going to affect my running, but it gives an ugly look. Say, for example, there is a dent in the car. The dent will not affect the movement of the car or the running of the car, but still there is reduction in value of car. So that means that you just apply that same concept to the vessel. Vessel has been damaged. There is some damage which should be repaired but need not be repaired for the running. But if it is not repaired, its value will come down. That value coming down, it is known as depreciation. That is covered under policy. But that is, he need not repair his vessel, but he can get that value as insurance compensation and keep it to his account. And there is no reinstatement of sum insured, and there is no excess for total loss. So we have come to end of hull policy. So shall we go to the claims part?
Madam, that no depreciation, can you explain what is it?
Actually, depreciation, that is the reduction in value because of the damage. It is an insurable loss. There is a damage to this thing. But unlike motor, we will not ask for bills. In motor, they will have to submit the bills that they have repaired. Then only you will pay the claim. Is that not? But here in marine, they will not submit the bill that they have repaired and all. It is not compulsory. So he may take a decision that I will not repair that vessel. But it is not going to affect the running of the vessel in any fashion. Okay.
You mean we will pay that loss?
Yes, definitely we will pay for that because the value of the vessel is 1 crore. Because of this damage, the 20 lakhs, it has to be repaired. But I have not repaired. But that is why my value of the vessel will come down to 90 lakhs. Say if I am not repairing it, that is the repairing will cost me 20 lakhs. But if I am not going to repair, my value of the vessel will come down. That is by 90 lakhs. Maybe if the market value of my vessel will be 90 lakhs, then that difference between 1 crore and 90 lakhs will be the depreciation value. That is the value has come down. That I will pay as insurance compensation. Instead of paying 20 per damage, I will pay depreciation as 10 lakhs.
Okay, in your slide you had mentioned no depreciation.
That depreciation means wear and tear. That is there is no depreciation means that is new for old. We are not going to have any wear and tear or any depreciation minor. We will not deduct that depreciation. Depreciation has a different meaning in hull insurance. So that is why, yeah. So there is no deduction for depreciation because it is going to be replacement value. Okay, it is like nil depreciation policy.
Ma'am, is seller's contingency and buyer's contingency is for annual or it should be taken for each consignment? Annual policy. It can be taken by buyer or seller, and it will cover all the voyages.
Oh no, actually you are asking about sellers and buyers interest contingency. Okay, okay. No, it can be if the FOB is for single transit.
Okay.
Or that also you can take, but only at the time of taking policy he has to take.
Taking policy of?
That is FOB. FOB policy itself he has to take.
Okay. That is for only single consignment.
Yes.
Okay. It's not annual policy.
It need not be.
Okay. but he can take.
I won't say it is not. If it is an open cover.
Okay, fine. Based on the type of policy taken.
Policy, yes.
Okay, okay. Thank you.
Madam, this depreciation you told now, madam, for no, for unrepaired damage. Only the time of total loss that will be taken into account. Reducing
total loss, it is a total loss. There is no depreciation.
Okay.
Only for partial loss, depreciation will come. Because there is a partial loss or damage to the vessel. It has not been repaired. Because of that, the value of the vessel has come down. If it is total loss, there is no value to the vessel at all, no.
Okay, but what is that in
like
relation to?
Just you have it in mind that it is like dent in a car, yeah. Dent in a car. Okay, it is not total loss, but the value. If you go to the market and if you are going to sell that car, it will have a depreciated value if it is not being repaired. Is that not?
Yes, madam.
That is known as depreciation in value. It is not that depreciation due to wear and tear or something like that. In hull,
asking when that element will come into existence while settling claim. He is not going to claim.
Yeah, he will claim. He says, I am not going to repair, but my vessel's value is coming down, so you pay me that amount alone. So
okay, only the depreciated value will be paid as
the surveyor. He will go and inspect everything. If he repairs, it will come to 20 lakhs, but he doesn't want to repair. But if he is going to have it without repair, then his value will come down. From 1 crore, it might maybe only fetch only 90 lakhs. So his sum into that is the value of the vessel has come down. So that 10 lakhs we can pay as depreciation claim.
Okay, okay.
Madam, please give some clarity on the word assignment and both to blame.
Assignment means that is in case of constructive total loss. Okay. In that only, what you are asking, subrogation and assignment. That
assignment of policy.
Not assigning the policy and all.
Yeah, right, madam. Assignment of policy.
Assignment of policy is the actually the policy he will the CIF in CIF and all the insurance will be taken by the seller. Is that not
right?
And then what he will do is, along with all the documents, he will sign on the back of the policy.
Right.
Okay. And then he will hand it over to the banker.
Right.
Okay. As soon as he hands it over to the banker, his insurable interest gets transferred to the buyer. That activity is known as assignment of policy. Assignment of policy means by getting all those documents, I am transferring my ownership. This ownership of the policy that is being transferred by assignment.
Okay.
Okay.
Then madam, assignment is only conditional, no?
It is not conditional. What I am not.
It's not conditional. Okay, I'm telling that it's conditional.
No, if it is, it is conditional. Yeah, that is it has to be done. That's what you're telling, na?
Right.
Yeah, it has to be done because the seller, he has to, because then only the buyer will can take delivery of this, because LC they will ask for insurance and all. So here he has taken insurance. So insurance, the transfer is also compulsory. So he has to make that assignment and give it along with invoice, packing list, LC, all these things. He has to assign and give it.
Okay, fine, madam. Fine.
Yeah.
Then another word, madam, both to blame collision. Both
to blame means two vessels are involved in an accident and one vessel is at fault.
Right.
Okay. So this vessel, whichever is at fault, it is responsible for the loss or damage of the other vessel.
Right.
So it has to pay for the loss of the other vessel. So it is liable. For that, whatever is that liability of the vessel, first vessel, it is known as collision liability. Okay. So that is known as both to blame collision.
Okay.
Actually, in hull, it is called as 3/4 collision liability or 3/4 running down clause. In that, the hull, that is the hull policy will be paying only 3/4 of the liability under collision. In cargo, it will take the shape of both to blame collision clause. Okay, so that cargo owner will also become responsible by virtue of the bill of lading, that for any collision which has happened due to the
Okay.
negligence of the hull
Okay,
owner.
madam, you are telling that carrier and the cargo owners became the both to blame right now.
Carrier and the cargo owner.
Carrier
both,
owners
both,
yes.
both, yeah,
Thanks.
both.
Okay, madam. Thanks.
Okay. So, can we go ahead with claims?
Yes.
Okay. Because if we see claims, our part is over. Okay, other things you can very well, because we have already completed hull also. I will just take 15 minutes so that I will request Mr. Shantakumar to have your afternoon class by 2:30. Yeah, please.
Yeah, sure.
Okay, because we will அப்படியே அந்த கண்டினியூட்டியோட முடிச்சிடலாம்.
Okay.
So that அவங்களுக்கும் ஒரு இது இருக்காது, நம்மளுக்கு வந்து முடிக்கல அப்படிங்க வேண்டாம். Okay. Yeah, satisfaction. So இந்த claimsல வந்து சிலதெல்லாம் நான் கொஞ்சம் உங்களுக்கு புரியறதுக்கு கொஞ்சம் இது போட்டுருக்கேன், அதனால தான். Okay. So in claims, என்னன்னா, if the package is externally not sound, generally it is all only practical thing. Clean delivery report receipt should not be given, so it is a concealed damage. That sometimes there might be concealed damage or project cargo. These are all the things which have to be, just for practical purpose, we have to know that all these things. Okay. So debris removal clause is there, it is only due to the insured peril. Now we will go to the problem section. Okay, I am just giving you, now the participants can unmute their mic and then they can try to attend the problem if they can. Okay, so I am just asking you, this is the problem. Okay, shipment of leather sent from India to USA. It is an exporter from India to USA. On arrival, the gloves seemed to be wet and stained. At US, it was seen that the gloves were wet. Survey report said that gloves contained excessive moisture before shipment itself. From here, from India, when it was dispatched, there were moisture. Because of that moisture, you know very well, the nature of the gloves is that if it is moist for after few hours, it will be stained. Okay, that color, everything will be, and we will not be able to put our hands also inside the moist gloves. So it is of no use. So the claim is not payable. Falls under which exclusion?
Standard packaging, madam. Standard packaging.
Insufficient packing,
it is
madam.
not packaging. Actually, there was a moisture. Maybe at manufacturing place itself, there might be some moisture. It is not that moisture inside the this thing.
Inherent wise.
Because if there is any moisture content, then glove tend to act like this only. Okay. Yeah. And the vessel was badly damaged due to heavy weather. The vessel was put into port of refuge for repairs. Okay. It is a perishable cargo. ICCA plus VAR plus SRCC was given. Now the cargo is decayed. Is the claim payable?
No, madam.
No, madam.
Why no?
There is no physical loss or damage.
That is a physical loss or damage, because
but
it is
due to
insured peril, because it is due to delay. Delay, even though if it is caused by insured peril, it is not covered. Because of delay, only decay has happened. There is no direct loss or damage due to heavy weather. Okay, if because of heavy weather something has happened to the cargo, then it is payable. But nothing has happened to the cargo, but only for port of refuge it has taken, then it is this thing. Okay,
ma'am, in this delay clause, you said by delay is not payable, but during delay is payable, no?
During delay, something is happening because of insured peril, it is covered.
So by delay is not payable.
By delay, during delay it is covered. That is why port of refuge. If say for example it is kept in port of refuge, at that point of time some fire has occurred, it is covered.
Oh, super.
Yeah. Your way of understanding is very nice. By delay is during delay is covered. Good. I will take this word also in my next class.
Thank you, ma'am.
Then policy issued covering cargo with sale term FCA. FCA means free carrier. Okay. Loss due to sinking of ship. Consignment value 2 crore. Loss amount 1 crore. Excess 0.5% of the sum insured. What is the claim amount payable to seller?
Nothing. I think you gave this example while taking the class.
While taking class. That is why. Yeah. Okay. And here another thing we have to, because generally we see all these things, we will not go for this. First we have to see the sale term, and also here we have to see one thing. It is always in cargo. It is percentage on sum insured excess. In fire and all, it is 5% of the claim amount subject to minimum of 1 lakh. Like that only you will see, no? Is that not? In motor also it is percentage on claim. But but here in cargo, even if you see in your GC core, while underwriting, it will allow you to put only excess as a percentage of sum insured and not claim amount. So you have to have it in mind. So you should not calculate excess percentage on loss amount. If it is a payable claim, you should not go and calculate it on 1 crore. You have to calculate it on 2 crore, but deduct it from 1 crore. Okay. Then next, it is a CAF. Same problem. Okay, it is loss due to sinking of ship, but instead of FCA, it is CAF. What is the claim amount payable to seller?
Still nothing, madam.
Why?
Because the insurance is arranged by the seller, but still risk transfers at the time of FOB
on
point.
board the ship. Yes, superb. So here also the claim payable is none. See, like this only they will confuse. Okay, mostly it might not be payable, so we have to see the sale term. Again, now I am asking, what is the claim amount payable by buyer? Same thing. Sale term is CIF, sinking of ship, 2 crores, 1 crore, all these things. What is the claim amount payable to buyer? So now we have to calculate
99 lakhs,
sum insured. Yeah, we have to calculate success on sum insured. So
99 lakhs.
Yes, then we have to. So 99 lakhs will be the thing. Then the policy has been issued for covering cargo with sale term CIF. Now the policy is issued on ICC-B cover. So we have to be very careful when they say B. Cargo 1000 bags of sugar with 1 lakh kgs. Each bag has 100 kgs. Okay. While unloading from vessel, 100 bags were torn and the weight after loading was recorded as 7000 kgs. The seller
not payable.
Not payable.
Because it is ICCB.
Unloading.
Total loss.
And also the seller does not have insurable interest because I am saying it is unloading from vessel. Okay. ICCB also does not cover. Now
also it is not payable.
It is not because
it is covered only in the ICCA.
Okay. Yeah. Now here. ICCB.
It covers the whole loss of package.
50 bags fell into the sea. 100 bags were torn. So what?
50 bags total loss.
50 bags total loss is payable under ICCB. 100 bags torn not payable.
Partial loss payable.
Partial loss. Okay. Then policy is issued on ICCA. Now same problem. So all the 50 bags and 110 bags we will pay because it is ICCA cover. Okay. Now you understand the difference between ICCA and B?
Madam, seller has lodged the claim here.
Oh, seller. Okay, sorry. I myself got confused. Okay, seller. Seller means whether you will or not.
No, not payable.
Still on board the ship only. Okay, not payable. I have put payable. Okay. Then here. CIF policy is issued on ICCB basis. The buyer lodges the claim. Okay. ICCB. Here it was found that the consignment was stolen in the intermediate port. Okay, madam, there is a shortage of claim.
Madam, extraneous perils, TPND.
TPND, whether we are covering in ICCB?
Only A.
So here it is not payable. Unless your problem says that ICCB covers TPND also, this case it is not covered because it is pilferage. Okay. So
Yes,
theft pilferage not covered.
Okay.
Then ITCA was issued covering inland transit to a factory at Uttarakhand. Okay. At the entrance of the factory, there were some excise formalities to be completed. But the excise officer, he came late. Because of that, the truck was delayed. He detained. Okay. But on the food items inside the truck got spoiled. Is this loss payable under the policy? No. Because spoilage is due to delay.
Delay.
Okay. Now, there was an ITCA policy with SRCC. Okay. It is an all risk policy. It was issued covering inland transit of a milk tanker from Dharmapuri, Tamil Nadu, to a factory at Bangalore. So it is a chocolate factory. Say, for example, we will have it like that. And they use that milk from Dharmapuri for preparing the chocolate. Due to the Kaveri issue, there was a riot and the tanker was not allowed to enter the city for 3 days. The milk spoiled in the due course.
Again, delay.
Delay. So spoilage is delay. Now here, same thing. Tanker is coming from Dharmapuri to chocolate factory at Bangalore. There was a riot. Consignment weighed 10,000 liters of milk. Rioters attacked and the vehicle overturned. After the rioters left the place, the driver and cleaner could set straight the tanker. Around 6,000 liters got spilt. Okay, ground level 6,000 liters got spilt. And 4,000 liters could be saved. But on receipt of the factory, the quality of the residual milk and the 4,000 liters was there, no. It was checked, but the same was found contaminated because it was overturned. No, during that time, dust particles and other insects have entered. So the residual milk also was spoiled. Is the claim payable?
Yes, totally payable.
Yes,
Totally payable. Because of that riot only, physical loss or damage to the thing. So total it is due to riot. Okay. So again, another, I think it is last thing. Import consignment was covered on ICCA, WAR and SRCC. The value covered was CIF plus 10% plus customs duty. Okay. The importer paid customs duty in advance. But after receipt of cargo at destination port, the value was found to be increased. So he had to pay additional customs duty, but he could not pay at that time. So the customs authorities, they did not allow him to take delivery of the goods. So they kept it in customs bonded warehouse. So after 30 days only, he could pay the balance duty. So when it was kept in bonded warehouse, there was a fire.
Not covered.
In bonded warehouse, it is not covered.
It is the liability of customs.
It is the liability of the customs, and they have to take a fire policy for that. Once the cargo it reaches the bonded warehouse, our inland any transit policy will come to an end. Once it starts from that bonded warehouse, it will reattach. Okay. So yes, when it is in the bonded warehouse, there is no cover in marine policy. So I think with these few examples, which are very hypothetical, I think to some extent it might be clear now that how we have to approach a problem or a solution to find a solution. Okay. So all the best to your exams. What I'll do is I will
Thank you, madam.
all these PowerPoints with you through Santakumar. So I have also actually a few questions, around 170 or 180 questions that have that is prepared along with the answers. I will share that also. And then recovery and all you can study on your own, because it is nothing but what is the time limit for suing, what is the time limit for these things, all these things. And for that also I have prepared a table and I will give it to you. And whatever is the important points other than that from examination point of view, whatever that has come to my mind, I have put it in separate slide and I will also share that also. So if you go through all these things, I think to some extent you will have an idea about marine. If you have any doubt, you can just contact me over phone at any point of time. I will just give my number. If it is known to me, I will definitely try to help you. Okay. My number is 9444 759164. Again, I repeat, 9444 7591 and 64. My name is Rajalakshmi. So, in case of any doubt, you please feel free to contact me. If it is possible, I will try to answer your question. Even if it is not, I will try to get the answer for you from some source. Okay.
Madam, is there any WhatsApp group for this, madam, for discussion on various questions?
WhatsApp group and all we don't have.
Ma'am, ma'am, can you please repeat the number, madam? Sorry.
9444
Okay.
75
Okay.
91
Okay.
64.
64. Thank you, ma'am. Thank you.
Yeah. Sir,
Yes, madam. Yes.
no need for any WhatsApp group, sir, because there are a